All right, crypto market update. Happy Thursday, folks. We've got a lot of action and volatility in the market. Obviously, what goes up must come down, vice versa. So, basically, Bitcoin just recently had its parabolic blow off top, right? See it kind of curved up here. I was kind of looking at it level by level because what's interesting is when the market's ramping up, don't necessarily know when it's going to really hit its major local top, right? So we could see that the ascent here is a lot more vertical, and it kind of shot up past a lot of people's expectations, including my own. I was looking at this as a heavy resistance area, and then I was looking at resistance and through here, or this general zone. There was like a little bit of a doji candle. So it's like anytime the market starts to ramp up, you don't necessarily know where it's going to top out. But when you don't have deeper corrections, when you have these shallower corrections, generally it means the market's going to push up more, push up higher, right? So personally myself, I'm anticipating a deeper correction. Now, I kind of felt yesterday. So yesterday I took a bit of, I'll just explain where I'm at in my reasoning and such. So yesterday I sold a bit more BTC. It was just like under 1300. I think it was like 12.9 something or whatever. I saw it was shooting up. It's coming to fib level. There wasn't really any structural resistance here that you can see. But what I thought was interesting, looking at the previous cycle, the first the first parabola we had kind of shot up 2 fib levels. See how this curves up, goes parabolic, and then sellers stepped in. It was a big crash. Everyone's freaking out, all that stuff. History repeats. But this time around, instead of coming up to that level, it pretty much came up to, let's see, where was it? 0.618 area, right? It came up to like that sweet spot. So it's almost like it skipped this, or it had some resistance here, but it wasn't as sharp of a correction. It didn't have this like ascending triangle consolidation. So it's kind of different, right? The structure kind of changed. There's a lot of differences in this market cycle than the previous one. So interesting to look at as a general map, but we kind of shot past these levels straight up into this level right here. And what I find interesting about this level is that similar to where we're at now, there wasn't really any structural resistance. There's just a 0.618 fib level. The dead cat bounce where there was structural resistance was at the point right there, and then at the fib level down here you had some nice structural resistance. So this kind of just hit a fib level on the nose, and there was actually some confluence too, so you could do an extension and you can kind of see it was almost at the 1.618 zone, so there's a bit of confluence there. So right now we're kind of at that 0.618 retracement, right? We have retraced, about at least two-thirds of the way, right? So that was a fairly epic bounce, right? So I took a bit more profit off the table for my longer term stash of BTC. To be honest, at the beginning of the year, like this market's moving a lot faster than I planned for. I was prepared to handle whatever market, but I was kind of anticipating or preparing myself for the possibility of a prolonged, boring market. Not to get one's hopes up high. Definitely pleasantly surprised. But it kind of forced my hand to sell more Bitcoin earlier than I kind of wanted to, anticipated, which means, more taxable events. So I created a few big taxable events this year. which is fine. The reason why I wanted to free up some capitals, when I saw I was going vertical strip, I was like, okay, well, what's going to happen next? So I don't know where the top's going to be, and I don't try to predict tops. I look at levels. I entertain the possibility of tops at each level, right? And kind of map out if-then scenarios of how I'd treat the market. And what I'll do is I'll just kind of map out criteria of what I feel would be good areas that I would like to sell or buy dips. Now, should the market decide not to produce those areas for me, then that's fine. I'm more than okay with letting things go. I'm very much, I very much consider myself kind of a bit of a passive trader, as in just going for the much bigger swings, less paperwork, less taxable events, and then also less stress, less having to like be glued in front of my computer to catch every stupid little move, blah, blah, blah. I mean, if people want to do that, it's great, right? I used to do that. It's awesome. You could certainly burn out if you do it for too long. If you do it for, you know, like I've burnt out a couple of times trading a lot when the markets go nuts, right? But now I wait for the market to come to me. If it doesn't want to come to my ideal areas, it's fine. That's fine, right? So it's kind of like I'm shopping. I kind of view it, if I'm shopping for a Bitcoin dip, I like the bounce plays and stuff. So if I'm shopping for a dip, it's kind of like, well, if I can get the ideal price of what I'm willing to buy at, what I think is a good, reasonable size correction, or I think there's a higher probability of a good bounce and some profit, then I'll put some capital towards that, perhaps have a nice sized order, make it worth my while, and most likely just do it on the spot market to reduce the stress and risk versus like going high leverage and stuff, right? Because spot markets, you can kind of average into a general zone, right? So I saw it's going straight vertical. I was like, okay, I need to have some fiat sitting on the exchange, because when it crashes, there will be a bounce play, as we've seen many, many times before. And I actually love the initial crashes on parabolas, right? They're great. There's lots of volatile. I love the crashes on any part of the market. Anytime it goes on an ascent, it's almost sometimes when the market just keeps going up higher and higher and higher and higher and higher, I get kind of uneasy about that. I just usually it just requires like either I'm taking profit or I'm just waiting for a crash, right? And it's usually just kind of waiting and patiently waiting for it to do its thing and for everyone to get all euphoric and mad about price, and then wait for it to crash. And then there's usually some nice bounce plays, a lot of peak volatility, right? Anytime you get that major crashes, you get periods of peak volatilities that can produce really, really nice bounce places, whether it's a bull trend or a bear trend, right? My favorite time and the bear trend was the first 2 quarters. The first 2 quarters trading this bear trend were like easy peasy for me. It was my preferred point in the bear trend. After, when it started to get into the slow grind, a lot less volatility, not as fun, not as exciting. The bounces basically were very weak, not a lot of edge. If anything, knife catching dips and bounces was almost like over trading, and the tighter the range gets, right? Higher risk, less reward versus, peak volatility, big bounces. That's great. This capitulation was obviously, great opportunity and stuff in general, but I wasn't a fan that it didn't really V-bottom. It would have been nice if it had that nice volatility. It would have been more profitable. Instead, it was kind of like it just stuck to the floor and went sideways and then eventually broke out. So it didn't even have like a nice classic V-bottom, right? And these are good examples of, having market criteria, having a plan, a strategy, sticking with a strategy, a market condition that works for you, but then being in a good trade, a good position, but it not necessarily playing out the way you anticipate. And the markets will often do that. I mean, if the market's played out exactly the way everyone anticipates, then obviously everyone would be making money in the markets, right? No one would be working regular jobs. Every single person in the world would just be trading because it'd be so easy to just pull money out of the machine. But obviously it doesn't work that way. You've got a lot of zero-sum game. For anyone who wins big, there's a lot of losers. Even if you win big, you could also lose big too. Sometimes there's like, people can be in the 50-50 range. Sometimes they lose more. And to make it to the higher edge, the higher echelon, the 10% of like getting consistent money out of the market on a regular basis, I find for myself what has worked the best is just looking at the meta picture and just going for the much bigger moves. It's just a lot easier. The bigger bounce plays, the bigger volatility, the bigger parabolas, all that kind of stuff. It's just much easier for me. So do I miss a lot of smaller moves in between? Do I miss these small little dips or whatever in between? Sure. Or, breakouts and stuff. Definitely, right? But I'm okay with that at this point for myself personally. I'm okay with that for at this point in my, I guess you could say, crypto career, because the paperwork and the taxable events for me are a real pain. Like, me spending months, a year doing paperwork for taxes, and having 2 accountants on top of that and a tax lawyer, sucks, right? Like, that's not the lifestyle I want. And unfortunately, crypto is not easy to figure all that stuff out, right? So, my strategy for this cycle has really just been like trade less, earn more, just wait for the bigger swings. Thus far, it's served me all right because, I took profit twice this year, and they were at fairly reasonable areas, and they're, nice little chunk of change. But I needed to free up some capital, some USD on an exchange, so that should a dip opportunity present itself, I mean, something that just kind of screams opportunity to me, low-hanging fruit type of thing, without trying to force it or hunt too much for something. If it were to just kind of present itself to me where it says, hey, here's some easy money. I want to have some capital. I want to have some fiat available to profit off of that. Otherwise, I'm just kind of like looking at money on the table and saying no to it, right? And, as much as I don't want to do paperwork and all that stuff, saying no to money on the table is also kind of stupid when you have some good market conditions, when you have a lot of volatility in the markets, right? When you have possible trade setups that are conducive to one's particular strategy, right? So I had to adapt, right? I was preparing myself for a longer market. I mean, this accumulation period is a lot faster than the previous cycle. Some people are claiming that this is like the longest bear trend in Bitcoin, and it's not actually. This is a very fast accumulation period, whereas we had 11 months. We almost followed the perfectly. I mean, we had the parabola, in December, November zone, and then the crash, and then the capitulation into the new year capitulation right around Christmas time, deja vu. Right, that's another reason why I went so bloody hard on that capitulation. I was like, wow, this is deja vu. This is Christmas capitulation, right? It was starting like a little bit earlier, November, whatnot, but around that same time, there was a lot of bleeding. But the difference is this time, what wasn't deja vu, and what did kind of throw me for a bit of a curveball, is we didn't have a V-bottom bounce. See, what my initial plan was on this so what I anticipated was a nice like bounce play, maybe even like a retest, a prior support turn resistance, right? So I was like averaging down into this. I was gunning for like a V bottom, and then I was going to lock in some profit just off of the immediate V bottom, and then use that go back into fiat, and then use that to reaccumulate into the lows as it develops a channel, right? So that was my plan, right? But the markets don't always, like, they don't necessarily give a shit about our plan or our goals or our feelings about what we want, right? So we also have to kind of, you could have a plan and an idea, but sometimes you have to adapt. So adaptation for me here required actually being more patient and really just kind of disengaging from the market, and not over analyzing and looking at every bar and literally wasting my time staring at charts, you know. There's got to be a point. This is a part of the mental and emotional management too, is that there's points in the markets where it's actually best to disengage and not be so absorbed in it, right? You know, when you're in the gutter going sideways, and you know, you've taken on some pretty big risks as far as loading up in crypto and stuff. Like sometimes just going on a vacation, you know, spending some time on a beach, or a dose of apathy, just like not really giving a crap anymore. You know, that's kind of, I had to disengage, right? To not overanalyze that. And that's how one could also be a contrarian against the meta trend and the meta market sentiment. When everyone's out in the dumps and, you know, crying about how shitty their bags are and how everything is a scam and they're fighting each other, that's the time to disengage and to go on vacation or something, you know, enjoy life, live your life, you know, not be in it every day. Same goes for like parabolas. When everyone's like screaming for 100K and the parabolic experts come crawling out of the gutter or whatever, people building huge followings, selling cheap opium to the masses, selling them what they want to hear, right? Sometimes it's good to just really disengage. You know, if you're sitting in fiat, if you take your profit, just pull back. No need to try to, obviously, like we had a nice little, I'll talk about this too, a nice little alt season in there. So sometimes it was a little bit more difficult to disengage when altcoins were kind of going nuts too at the time, right? So there's obviously, you still, when I say disengage, I don't mean turn off your phone and computer and never look at a chart. Like obviously every single day of my life is waking up and looking at a chart every morning, period. Whether I'm in active trades or whether I'm engaged or disengaged or whatever, it doesn't matter. I'm still going to look at the bloody chart, right? So it doesn't mean like ignorance. It doesn't mean ignoring what's happening or closing your eyes. And it just means like, you know, being aware, you're being aware and vigilant as to what's happening, but you're just slightly detached. You're trying to like disconnect from a lot of emotion around it, right? So that, because otherwise, if you get too engaged in the emotion of it, the stress isn't going to help you. It's going to take years off your life, right? Which, you know, money's not worth any years off your life, because, you know, with fractional reserve banking and fiat, you know, fiat's technically infinite, and the time you have on this earth, it isn't. That's a finite resource that you have, right? So that's one of the reasons why I go for the bigger moves, because, you know, if you spend like 14 hours a day glued in front of your you know, computer, not exercising, not taking care of yourself, being stressed, cortisol levels going up, all that kind of stuff, trying to catch like every little move, you know, whether you know, it's good. You can do that. I think everyone in crypto ends up doing that and living that at one point or another, and it's really, I wouldn't necessarily detract anyone from having that experience, because you can learn about yourself a lot as a trader and as an individual. But there comes a point, you know, when you cash some chips off the table or whatever, there comes a point where you have to enjoy your life, and you pick a smart strategy that just kind of that creates and allows for more balance, right? That's a very important part. And so there's many different ways to cut the cake. And then some people just don't have the time to do that. Obviously, some people have, you know, families they got to raise and so on and so forth. They might not want to engage for 14 hours a day in the market, being a crypto freak, you know? So anyways, so blah, blah, let's talk about where my ideal buy zones are right now. So if I want to just kind of look for a buy zone, well, it came up 0.618. I would, personally, I think like anywhere around here would be kind of cool. This is where I'd be gunning to buy something, you know, right around here. If I want to, you know, see if there's any confluence and through here. There's a fib level right up through here. So I would say for me, it would be like, and usually what I do is I just kind of average into dips, right? So it's not, when I hunt for a dip, like I have no bloody clue where the bottom's going to be if it gets that low, right? So what I'll do is I'll usually stack some orders in a zone, right, in an area where I was like, okay, where do I see a higher probability of easy money, right? Now, if we were to go down that low, right, once we get into 95 level, now we've gone into healthy 30% correction, getting down a little bit lower, all the way to 40% would be the low eights, right? But if you get down to like 38%, anywhere in the zones, like in the 30s percent, that doesn't mean it's not going to have bounces before then, right? Because sometimes there's like multiple little bounces all the way down. In fact, no Bitcoin market or crypto market is just shot down in a straight line, right? Every single, and you could scalp these, right? You could scalp every little bounce, you know, these are all scalpable day trading events. There's lots of like these wicks here are usually really, really good for bounces. Like these wicks are the best for bounces. How you do that is you get down on the small time frames, right? You get down to like the 5 minute, the 3 minute, you go into small time frames. Just to show you an example, are you going to add some more XTZ on your cycle play? I'm personally not. I've got like more than enough XTZ right now. But I will be hunting for, you know, very specific, more sniper type bounce plays, more like midterm type bounce plays. Okay, and I'm going to talk about alts. I'm going to talk about alt season and my thoughts around that and all that kind of stuff. All right, so now here's the thing. I don't.
Hey,
like,
Rocky, can you hear me?
Yeah, how's it going, Chris?
Good. Is it super loud in the background by chance?
Nope.
Okay, cool. I'm traveling right now. I'm on mobile, but just wanted to chime in and kind of add my 2 cents on the dip play.
Sure.
So I was noticing in between 10 and 11 is it's like a 25 to 35% dip, and that's kind of what I'm watching.
Okay.
Is like if we can get below 11, probably closer to 10 around like prior support.
Are you looking on Bitfinex or GDAX?
GDAX mostly.
GDAX, okay.
Yeah. I know prices got a little dissected there.
All right. So you're looking like for the 10 to like this batch right here.
Yeah. So if you can zoom in a little bit, like on the hourly, there you go. Yeah, what I'm looking for is some kind of outlier volume around that support zone. Which right now we do have some strong support coming in.
Yeah,
I'm not in a position to. Yeah, I'm not in a position to start scaling in right now just because I'm on the move, but that's kind of the first signs of a potential bounce play is when you have like extreme volume around prior resistance turn support. And then, you know, as we talk about the hard thing with dip buys is, you know, you don't know where the low is until it pivots, right? Until it's like a hindsight indicator where you go, oh yeah, that's the low. So when you're buying blood, the only way you can do that with confidence is by managing the entry by scaling in and using position sizing. So the next level, like if this level doesn't hold, for example, you got to do the math down to 8,500.
Yeah.
Which is the next kind of major zone. And I think that would be about a 35 to 40% range off the high.
Yeah, this would be this would be like 38
Yeah.
right down there, 38,
See,
39.
yeah, say we got more downside action and we got like an extreme panic on like the hourly chart at that zone, that to me would be most ideal. Like this is kind of the first area where we can get a little bounce. But at that point, I think the risk to reward is just a lot better. I should have clarified that in the watch list that I was posting, but I'm like fighting a cold and my brain is moving pretty slow today. So
yeah, and you're on your phone traveling and stuff, you know. So
it's a bad combination, that's for sure.
Yeah, for sure.
But anyway, yeah. So this is kind of the first area, and then 8,500, much better risk to reward down at that point.
For sure. And you know the thing that really annoys me about Bitcoin is it loves to make its craziest moves when it's the most inconvenient too. When you're traveling or on a holiday or, you know, at some function or something, and then suddenly it wants to do crazy stuff.
Oh yeah. I've taken trades in some really weird areas. But anyway, it's pretty loud here, so I'm going to go ahead and mute myself and pass it back over, but just wanted to add that to you.
All right. Thanks, Chris. Thanks for sharing that.
Yeah, thanks, Arky. Thanks, guys. See ya.
Yeah, for sure. So we can see right now it's kind of waking up right at that support, and it wouldn't surprise me, just add to what Chris said, it wouldn't surprise me at all to see like a good initial bounce here. Like we even had a good initial bounce yesterday as well. And I was trying to scalp some of this action in the room yesterday, and BitMEX was freezing up on me. Like I was trying to short, I hit the button like 20 times and nothing happened. And then I tried to catch the bounce 20 times and nothing happened. And it's like, all right, whatever. It's not my, it's not my time. But yesterday when I talked about taking profit, so it was right about here. And after, so I posted a chart in the trade alerts, and then afterwards in the room, as we were breaking down, because we broke down like pretty much soon after, within minutes of me saying that, because I had taken profit as we're breaking down. I wanted to actually take profit higher, but I had to wait for the really slow transfer times or whatnot, sending Bitcoin over. So that kind of took a while to get those confirmations. But one thing that I posted in the room, this is like the 10-minute chart at the time, and you can see like the first dead cat was bounced up to the 0.618 zone. That's like my favorite area, anywhere between like 0.618, 0.78. That's my favorite zone for like bounce plays or dip buys, stuff like that. That's my personal sweet spot. So I watched it get up here, and there's always a risk that it V-bottoms. So here's the thing. Let me just zoom out, see if I can get into some smaller time frames here to show you what I'm talking about. It's good that we're making a video, because once once there's enough price data, you can't go back 10 minutes like forever on the chart, right? So so basically the market's going parabolic, it's going higher than most people anticipate. It's kind of like a ticking time bomb at that point. So it's like every little correction, every little bump, it's like, is this the top? Is this the top? You know, so it's usually a point of like peak interest and the time to really pay attention. Same with like knife catching bounce plays and capitulation. So yeah, now it's like the opposite. Now it's like leaning more towards bounce play right now. Like this could very well V-bottom right here. It looks like it kind of wants to, just like this one. Now, it doesn't necessarily mean this will be. If it did V-bottom here, there's one or two possibilities, right? Same with the V-bottom here when you're going parabolic, is that the thing with a parabolic market is that it can often it can have multiple big corrections and shoot up higher and higher. So we saw that a lot at the tail end of 2017. We saw that a lot. We saw some very fast, violent corrections. Even this one, fast, violent correction, and then it pushed up higher, and then it topped out, right? But the thing you'll notice with these corrections is none of these are, in my opinion, these are like parabolic corrections, which means they're faster, and they don't fall, they don't bleed as long, and they don't drop as low as more healthy bull trend, like the larger pivot corrections, right? So like for example, this is like a 39 right here, right? 39%, isn't it? It hit a major resistance. It had to bleed out, took multiple days, maybe a few weeks here, right? Had to bleed out, reestablish prior resistance, that support, and then step up and do it again. But like as we were going parabolic, right? The corrections, you didn't have those much deeper 35 to 45% corrections. They were really, really fast. Same thing on this run, right? The corrections, as it's ramping up, it's like it's not done as parabolic. This is only 20%. This one was probably the same. This is only like 18%. So one thing to watch for is that you can have an idea about market behavior. So this is how I kind of treat the markets. It's like, okay, I know general market behavior and how the market works. I know that when a market goes up really, really fast, parabolic, that it's a ticking time bomb and to lean towards selling or shorting. And then I know when there's a huge, massive crash, that there's always a bounce play. If there's lots of volume, liquidity, there's always a sharp bounce play. There's usually a nice sharp bounce play, I should say. There seemed to be an exception to the rule over here because this bounce play was weak, very weak for the level of dumping, right? It's like that's not a big bounce play. A straight up double, a straight up 100% bounce or 80% or whatever is definitely more of a typical capitulation bounce play. So this is, I've already talked about this a billion times, but this is quite different and interesting, right? So we know that you get these nice sharp bounce plays, and we also know that you get multiple sharp bounce plays. So you could get nice sharp bounce play on a parabola, and then it makes a lower high, rolls over, drops to the next level. And so you could actually usually scalp and swing those ones, right? Now, if I were to scalp and swing, generally, where do I look for? Well, 0.618, 0.7 is targets, right? So I didn't know where the top was going to be. I saw that it was shooting up past the fib level, right? I knew it was parabolic. I knew it was a ticking time bomb. I didn't know if it was going to top out at that fib level or if it was just going to go absolute nuts and test the all-time highs or maybe even break the all-time highs like a double bubble 2013 type scenario, right? But what I did know is that we're at key inflection points. I knew that the market is parabolic. I knew it was a ticking time bomb. It was going to have one hell of a correction, right? So knowing all of that, plan accordingly, take a little profit, get some fiat ready, so on and so forth. The first bounce right here. So as soon as I saw the first sign of weakness, obviously it's too late. It's too late to sell down here, right? Once it shakes out and it wicks up very, very quickly. I was watching this live. Wicks up very, very quickly. It's like last call is like the dead cat bounce, the first dead cat bounce on a weakness on a lower time frame, 0.618. That's generally like a good time to take profit. Now, here's the thing. If this doesn't produce a higher low bounce, not higher low, sorry, lower high, immediate lower high bounce to crack down, then there's a chance that it shoots up, V-bottoms, and does another parabolic push up like we saw in 2017. Then we start to get into really, really unhealthy territory. See, I don't care that the Bitcoin market's correcting right now. I'm actually happy that the Bitcoin market's correcting. Everybody, in social media is like, yeah, let's go to 100K, woo! Like they didn't learn anything from the last cycle, right? They're all, I want it to 50K by July, and who knows? You never know. Crazier stuff that happens. It's not over, right? It's obviously gone. This is the irony. This is actually what's kind of funny at the market is that it shoots up higher than everyone's expectations in general because, people are like, oh, we could top out here, people shorting all the way through, people shorting down there, wherever, shorting all the way up, blah. Shoots up a lot higher than most people anticipate. A lot of people expecting like blood a lot earlier, right? But then when it goes really nuts and it overshoots everyone's expectations, suddenly their expectations also go really nuts and they overshoot. And then suddenly it's like, you're up here, and instead of being, oh, okay, this is this is a moment to be cautious. That's quite a hell of a run, and that would be a very logical place for a local top and pray for some consolidation for a healthy trend, right? Suddenly you get up there, and it overshot everyone's expectations, and suddenly we're all like, oh, let's 50K by next month, or whatever. Now, obviously, this could still, double bubble. That's always a possibility. I'm never arrogant to think that to discount any possibility in a market, right? Because if you discount any possibility in a market, then you'll be unprepared. It means you haven't thought out all the scenarios and haven't mapped out a plan for all scenarios, right? And can tend to be a little bit too fixated or stuck on one possible outcome, right? So like I say many times, I generally don't necessarily try to predict what the market's going to do. Just understand market behavior and look at key levels, both on the up and the down. And then with the strategy, the overall meta strategy of buying low, selling high, just to simplify it, buy low, sell high. That's my favorite. I just buy low, sell high, right? Do I know where exact bottoms or tops are going to be? No. Can I come close sometimes? Sure. Can I mess it up and it can overshoot, undershoot? Sure, absolutely, right? But just a general framework of buy low, sell high in crypto, I find can give one an edge in the markets, right? Can produce because of the volatility, can produce a higher probability, especially just going for the bigger swings, of making more consistent returns over the long haul. So all that to say, I've got my ideal buy zone, right? I've been kind of tempted to, I was going to kind of do a bit of a scalp here today as a day trade, but I didn't really want to be distracted by my trade while I'm doing an update. I also sometimes enjoy, mental clarity and not juggling too many things at the same time, also because I'm preparing for a trip too, so I don't want to overload myself. But as far as like a nice casual swing trade dip buy, I'm a buyer. I'm a buyer here, I'm a buyer in this general zone, 85, the 8s, low 9s. I've already last night, in case we had a flash crash or whatever, last night before I went to bed, I already stacked my orders down there, drew a box in the trade alert or whatnot. But that's not a prediction. I'm not saying the market's going to go there. It might not, right? I didn't get any good the dips I was gunning for here. They were a little bit too shallow for me. But I'm personally okay with letting them go, right? I don't have to be on every single move. I'm just going for like the bigger, easier swings, the bigger, easier plays. So what this would be similar to, let's say, catching a nice dip here. Let's say at the 0.618, right? I mean, this is a very logical area. You got a range of prior resistance, 0.618, nice dip, right? My preference would obviously be this type of scenario. Obviously, we're up higher. We overshot higher, but I would absolutely love for Bitcoin to have a nice epic bounce play and then consolidate into a 6-month triangle at the current areas. That would be my best favorite case scenario. And you could ask me, okay, well, why? Why would you want that? Because I love holding crypto. I love crypto, right? you know, just having crypto, holding crypto in and of itself is a bit of a hedge, right? Because it has features and unique properties, be your own bank and all that stuff that other investments don't have. So when markets go too parabolic, too fast, and if, let's say we just went into double bubble and just shot, let's say everyone's moon dreams did come true and we just shoot to 50K or 100K or something crazy or whatever really fast and go into like a number 2 parabola. So what I mean by that is I mapped out 3 main parabolas from the last cycle. This is number 1 right here, which is the break of the range. Number 2 was the break of the all-time high parabola, right? And I traded all of these. They're all fun. This is a number 2 parabola. And then there's the all-time high number 3 parabola. But here's the problem I have is that if we don't consolidate, right? If we don't have a healthy trend, healthy correction, healthy trend, reacquaint ourselves, let the price establish itself at these 5-digit levels or whatever around this general zone, produce some higher lows, nice big ascending triangle, something like that for sweet breakout play or whatever. That might not happen because I'll tell you one thing, a lot of people got left behind on this run up. A lot of people sold too soon. A lot of people went all out. A lot of people never got the dip they're looking for or didn't go in heavy enough at the lows. There's still a lot of money sitting on the sidelines. So I can't discount the possibility of going, straight into a number 2. Obviously, if we V-bottomed and then start testing the all-time highs, then it's starting to look like, it would really start to seriously shift and look like a number 2 parabola. But the problem I have with that is then we get into this existential crisis of the markets being unsustainable again, and suddenly having to batten down the hatches again for Operation Shitstorm for another friggin' bear trend. And I'm not, I personally, I'll be ready for that. I'll do what I have to do to prepare myself, and I'll probably sell like 80% of my Bitcoin or maybe even 90%. But I don't really want to do that yet. You know what I mean? I enjoy holding Bitcoin. If that could take a couple of years, that'd be great. But you know what? The markets actually don't give a crap what I want. I know other people would like to accumulate too, have some time to accumulate. And also the market's not, last I checked, the market hasn't been taking requests, right? You could put your ballot in the suggestion box and the market is likely not going to listen. So obviously the market doesn't care what we want, right? So that to me would be, we need a union to organize the market or something. Anyways, the risk of a number 2 parabola is then you get into double bubble territory. So I can make these numbers bigger. And there probably won't be a number 3 if we just shot up like that. Not the big correction and all that stuff. And also depending on how high up, look at that wick. If this weekly closes like that, that's going to be nasty. I don't think it will necessarily, but who knows, right? Like I said, I'm not making predictions. I'm just, it's like a hybrid approach. It's like mapping out the different forms of market behavior and just planning accordingly. The market does this, I'm a buyer. If the market does that, I'm a seller. The market does nothing, I'll do nothing, right? If the market does anything in between my ideal buy and sell, then I do nothing. I wait, I'm patient, right? It's a fairly simple way to go about things. That's just my approach and my strategy. There's lots of different ways to make money. Lots of traders, investors have their own different strategies. So it's all good, right? I don't, as long as you make money, that's all that counts in this market. If you spend your entire day scalping the minute chart, if you're making money off of that, then all the power to you. So that's my ideal buy zone. Now, when I say an ideal buy zone, that doesn't necessarily mean that I'll be buying Bitcoin. I do have some orders down here stacked on Bitcoin. I did sell some Bitcoin up at the highs, because that was obviously, like, I'm not going to go sell some alts that are capitulating on the BTC charts or whatever. That wouldn't be the most opportune time for me to sell alts or whatever. And you know, a lot of the alts I have are still very much like early cycle. Bitcoin was going kind of parabolic, still early cycle in my opinion though. But what it does mean is that when Bitcoin hits this area, what I'd like to do, so I do have some Bitcoin orders stacked in case it just drops there right now, or when I'm not paying attention, right? I'd rather have some orders stacked and be ready in case it did wick down that low, versus not have any orders and then miss the dip, right? But ideally, I'm actually hunting for a liquid altcoin that I'm not invested in, because I'll save money on taxes. It's going to make my taxes easier. I'll actually, if I save money on taxes and minimize my paperwork, then I'm technically squeezing out more profit out of the market. One market I kind of have my eyes on right now is possibly, it seems like it's been bleeding a little bit harder than others. So it all depends on what the market, which market bleeds out the most, where prices are at in general on altcoins and stuff like that. I'd just be going for straight up bounce plays on the spot market. I'm not necessarily a buyer up here. Can it bounce up here? Sure. It can. I personally would like something a little bit more degenerate. If it doesn't happen, then I'm not taking the trade. And and I've got some fiat cash reserves for any time I do see an opportunity in the market. So what's kind of shifted for me a bit this year was I was trying to go the whole year without taking any profit off the table. But sometimes when the markets go too nuts, I just screams opportunity. Like, if you don't do it, then it's generally not a good thing. It's usually if I see an opportunity, it's almost like, imagine a cat taking a nap and a mouse runs in front of it, right? What's it going to do? It's going to wake up out of its nap and chase the mouse. It's almost going to be like instinct, right? So if you see a market's just shooting up really too high, too fast, it's kind of, like I said, it forced my hand to take a little bit of profit off the table and get some fiat on an exchange. So this is the first time this year that I've actually had fiat sitting on an exchange, except for like just a little bit on BitMEX. Always keep some on BitMEX just in case there's ever an emergency, right? You never know. So I do have some fiat now sitting, and so that's more for midterm bounce play trade setups should an opportunity present itself. But it could wick up and bounce here, right? Especially if Bitcoin did. I'm not a fan of buying up here. If it does that, that's fine. The market will do what it'll do. My alts will feel good because they'll go back up and all that kind of crap, right? But if it really crashed hard, down into this zone or whatever, then I would definitely be a buyer, because now you're looking at percentages. You're seeing, man, this thing just dumped 50%. Nice probability of a bounce play. So then what? What happens if I catch a knife down there? Then what do I do? Then I use my fibs again, and let's say I caught some dips down here. Then I say, okay, well, what's a couple fib levels up? Oh, a couple fib levels up, 30%. It's pretty decent for a quick trade with some decent size. 40%, 50%. Who knows? Maybe leave a runner in case I wanted to V-bottom and do some silly stuff. But I would just kind of trade the bounce play off of those fib levels just as quick targets, smaller targets, right? Shorter targets. So that would be the kind of trade setup that I would look for. So I'll be hunting for liquid altcoins on the USD pairs because I'm holding USD in the account. I'm not really interested in trading the BTC pairs because if I do, it's going to cost me more money. I'm going to have to pay stupid taxes every single time I trade Bitcoin for an altcoin. I'm going to pay tax on that, pay tax, and then create a lot more paperwork. Suddenly I got to know the cost average. The thing is with Canadian taxes, it's even worse than FIFO because they use cost averaging. So it's not about your first trade in is your first trade out, or your first investment in price, your first price in is your first price out, which is simple. It's every single price that you bought and sold. What's your opening average price? And then every single price that you've bought and sold throughout the year gets averaged into an annual average, and then your profits are calculated that way. So it actually makes it very challenging to figure out how much, to figure out what's the best tax situation for a trade, to think about that tax consequence, right? And so I'm a lot more proactive and kind of thinking about that, and Kaz, my co-pilot, saying maybe buying at the top would help offset that. Yeah, I'll save myself. I'll just buy at the parabola, and I'll sell at the bottom, and that'll help my tax situation. Yeah, it's not, if you have the money and you pulled the money aside and you prepared, and obviously having to pay a lot of tax on the money making the market's a good problem to have, because it means there has been profit, right? It means there's been profit versus big losses. But I have to really be proactive about my trades, and the strategy. And so taxes have been factored into my strategy. So I'm not interested in trading the BTC pairs anymore. I know there's a lot of crypto OGs that are obsessed with the BTC pairs. Guess what? The markets are changing, and there's a lot more liquidity coming in. And this isn't 2015, okay? Look at this. What's dominating all of the volume here on Ethereum? What pair? USDT, 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 or USD, right? So yeah, you could trade the BTC charts as well. And in my opinion, the definition of alt season is a price rise in both the BTC and USD charts. That's alt season. It gains over Bitcoin. It gains in USD. When Bitcoin's in a bull season, that is alt season. How crazy will alt season be? That's a category, from 1 to 5. If it goes complete parabolic, like we've seen before, then obviously you're getting into the category 4 or 5. If you have more of a mini season, like we saw recently in the recent run up, some things did go up fairly well as well. I mean, people are like, oh, opportunity costs. If you would, maximalists will look at altcoins bleeding against the BTC charts, and they'll say, oh, if you just stuck with Bitcoin, you wouldn't be wrecked, right? But then if you look at, okay, well, let's just look at, here's a random alt. What did EOS go up? 431%. What did BTC go up? 300%. So was it really opportunity cost, or is Bitcoin just playing catch up? Right? 334%. So where is the opportunity cost, right? People will always just kind of, trash talk whatever their bias is, right? Whatever their bias is. If you're a maximalist, everything you see, the other thing you see, open source project you see is a scam. You look at the world through the eyes of everything being a scam, right? If you're a shitcoin mooner that buys everything and everything, then everything's an opportunity to just go all in and average down on shitcoins and get completely wrecked all the time, right? Right. So there's two extremes, or getting scammed and buying into a bunch of sketchy ICOs all the time, or whatever, or shilling BitConnect, suddenly you're doing if you're a shitcoin maximalist, you're running BitConnect commercials on your YouTube, you're doing that kind of sketchy crap, right? That's the other extreme. And I would like to, I think that there's a good middle path of, a middle path between holding and trend riding versus taking profit, a middle path between, being interested in the technology, but also being a market realist, a profit maximalist, right? So on and so forth, right? Realizing that technicals surpass fundamentals, but fundamentals will show you a higher probability of things that can survive. Or like I was talking about before, my favorite point in the market is when the prices are super, super, super low in the market cycle, but the fundamentals are extremely bullish. I mean, pretty much every single update for, I probably said that every day for like 3 months. Like, oh, my favorite time in the market is when, there's fundamentals are super, super bullish and the price is in the gutter, right? That's where you find the opportunities, like here. And I kept on just talking about that all the time because there's really nothing else to talk about. And we talk about all the bullish fundamental news. The market caught up to that. This is what it looks like when the market caught up. But of course, it overshoots. People get a little too excited, catches up a little too fast, right? So that's that. Now I want to talk about the possibility of an alt season. I did talk about Dogecoin. I gave a chart. That didn't necessarily mean like, hey, here's a Doge chart, go all in on alts or anything like that. But basically what I had talked about in relation to that was that there were really only 4 prior times. So this would be the 5th time that Bitcoin dropped below, let's say 28 Satoshis, right? There was this time, there was this time, there was this time, there was this time in 2014, right? You had some other times where I had some nice bounces, just like over 2019, you had nice bounces. I wasn't a buyer. My rule's simple. I have a price zones where I really like Doge, and I didn't get any Doge. I didn't buy any Doge this time around, but I still use it as a bit of an indicator. And then there was a time that you can't even see on the charts because there's no exchange that even survived that long. Poloniex is the oldest, but if you go back to like Cryptsy or whatever, it was December 2013. Doge had launched December 2013. Bitcoin was going parabolic. Doge had dumped down to like 20 Satoshis. And then I think around Christmas, it was going nuts. All that kind of stuff. And we had an alt season. So we had an alt in 2014. We had an alt season when Bitcoin went parabolic. We had an alt season in the fall where Doge went nuts, and there was a whole bunch of other coins that went nuts. Counterparty, BitShares, NXT, all those kind of coins. Some of them popped at different times, but we had a lot of things that kind of popped off in the fall of 2014, and Doge was one of them. There was the infamous Wulong pump, where this whale like pumped it up into the stratosphere. I think that was I don't even know if there's a chart for that one because I think he brought it above 200 Satoshis or whatever. And then ones that other people are probably more familiar with. By the way, I still have a paper wallet with my original Doge that I had mined as a trophy or souvenir, right? My first year in crypto was more experimental, 2014 or whatever. I didn't really make any money in 2014. I didn't have a lot of money, and I was playing around and got wrecked on a few things, was up on some things, so on and so forth. But I did keep the Doge that I was mining. I lost a bunch of money trying to mine, blah, blah, blah. It's kind of, you're new, you're learning the ropes of something, so on and so forth, right? And so it's really 2015 was like the first year that when I went full time in the crypto. And then that's the first year where I actually made money, right? And then that money just kind of grew year after year, got bigger as the cycles and the price of the cycles got bigger. So stuff that's more familiar. So a lot of people, unless you were in the trenches, a lot of people don't know that about Doge. They weren't there. You can't even see that on the chart, right? This is why I say there's no shortcuts for experience, right? There's all kinds of like new gunslingers that are always showing up on Twitter. They joined like 3 months ago and they get big followings and they start groups, all that stuff. But it's like a lot of these people just learned how to walk yesterday. Now they're teaching people how to sprint, right? As far as like experience goes, as far as market experience. So there's really no shortcut for experience. Experience is number one. You could do the TA, you could do all that stuff. and it's good to know all that stuff, the TA and the fundamentals, but it means nothing without the experience. The experience is like, there's like subtle nuances sometimes in crypto too that you don't get in other markets. Like you still have all the same similar TA setups, but what other market has a pattern like this, like Doge? What other market has like this cyclical friggin' pumps like Dogecoin, right? None that I can think of anyways, in the legacy markets. Maybe there's some, I don't know. Stocks can do some crazy stuff, but you know, crypto's like, it's kind of unique that way, right? So we had an alt season right here. This was like the mother of alt seasons, right? This was like the big alt season on the BTC charts. This is where alts went parabolic on the BTC charts. That's when whales cashed out of their alts. They used altcoins to accumulate more Bitcoin. So this is like whales accumulating Bitcoin aggressively, cashing out, and then riding Bitcoin to the parabola, and then flipping back into alts and squeezing more profit, and then, you know, battening down hatches and all that stuff. And then this is the second one, right before, during the December parabola, where altcoins broke new USD all-time highs, but then, and went parabolic on the USD charts, but didn't go parabolic on the BTC charts, right? Similar to like how alts went nuts first on this Bitcoin bounce. You'll notice that alts gained first over Bitcoin. And then when it was Bitcoin's turn to take the torch, alts dumped against Bitcoin, and, you know, whales cashed out and they started riding the Bitcoin price, right? Multiplied. That was like an accumulation of Bitcoin by trading the alt BTC pairs. So all that to say, where are we now in this cycle? Well, do you have a hypothesis? This would be the best case scenario. Sometimes what happens when Bitcoin goes parabolic is it goes parabolic. So this is Bitcoin. I have the Bitcoin chart overlaid here, right? So it goes parabolic. And by the way, if on the ETH BTC chart, Ethereum is just bleeding out, 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 right? On the USD chart, it's relatively stable. It's relatively stable. It's holding up. Starting to break out as Bitcoin's going to parabolic. But then look, as soon as it crashes, right, it starts to bleed out, right? It starts to bleed out. Let's just see here. So the BTC parabola, okay, so this is okay, this is it right here. Sorry, my bad. So this is the Bitcoin parabola right there. And so everything's moving up with it, but it's bleeding out, bleeding out, bleeding out. So this date was 12/15. Let's just look at how that matches up on the ETH BTC charts. And by the way, if you're ever twiddling your thumbs, waiting for big moves, what one should spend more time doing versus trying to always chase or hunt for trades all the time. If one is interested in engaging in the markets, one should spend the majority of their time back testing and studying the prior market behavior and forming analysis based on that, because that's how we learn market behavior the best, right? Let's see, BTC. So what date did we say that was? This was, 12/15, the launch of CME. And then you could see that 12/15, right when Bitcoin was crashing, when it topped out and Bitcoin was crashing, all of a sudden, Ethereum starts V-bottoming, bouncing on the BTC charts, right? All of a sudden, it starts finding support on the BTC charts, even though it was losing opportunity costs. And then it was at the point when Bitcoin had its dead cat bounce that things got spring-loaded into like parabolic alt season. It was that initial dead cat bounce. So we dropped down, you know, to the, I'll have to pull out the BTC chart, but we had a big dead cat bounce, and it was 107 is when Ethereum went really parabolic, and then you can see it was it was shooting up, going parabolic on the BTC chart. So now it's alt season, it's gaining on the BTC and the USD. So this only happened after Bitcoin crashed from being parabolic. It just so happens that Dogecoin fell back into its regional zone right around the same time that happened. So I'm looking at this and I'm like, okay, there is a possibility, keep our fingers crossed, that when we get a nice dead cat on Bitcoin, especially if it doesn't just V-bottom and break the all-time high, and if it wants to consolidate a bit more. A consolidation in a bull trend is generally good for altcoins, right? It's generally good. That's usually when altcoins really, really thrive. So it's on that dead cat that we had that alt season where they pushed. Now, let's kind of look at where altcoins were at the time. So at this time, or we'll look at Ethereum since it's the most liquid one. At this time, you know, Ethereum had a massive, massive crash, right? It was bleeding out fairly hard with Bitcoin. It was tracking Bitcoin and it was bleeding out, shaking, just like altcoins are bleeding out now on this parabola. And then that's when it went nuts, right? Well, we know that altcoins have been capitulating on the BTC charts, just like they capitulated before on the BTC charts, and all the despair in the market sentiment was bad. We know that bull trends are good for altcoins. Altcoins tend to only appreciate in dollar value and do really, really well. And we have decent alt seasons when Bitcoin is in a bull trend historically, although we have had some nice ones in 2014. Obviously, we had some dead cats in 2018, but you know, I wouldn't necessarily call those like alt seasons. You're just looking at a few 100% here and there, right? Very mild, maybe category 1 or 2 alt season versus a 3, 4, 5. So basically, if we look at the current price, right? So here we see on the BTC charts, and some altcoins have bled out even harder, but we see a lot of these coins at support, you know, at grinding at support levels. If you look at the USD charts of some of these coins, even if Bitcoin has a bigger correction, and even if everything has an even bigger correction, ask yourself, did this correction produce a higher low? So right now, if Bitcoin were to bounce, right now this correction on ETH is pretty much like prior resistance turn support. You know, if it went lower, you know, as long as it doesn't take out this low, if it takes out this low, then we're probably getting into, you know, a different, like a larger reaccumulation pattern if it took out that low. But if it, let's say, bled out more and hit some support, produce a higher low or something like that, and then bounces and shoots up for a higher high, then that's when you start to get into that parabolic alt season. Depending on how nuts things would go, my hand would probably be forced to take some profit off the table on some altcoins. Obviously creating some more taxable events and stuff if that were the case. If not, if that hypothesis doesn't play out and they just end up bleeding out more and grinding more and chopping more, then it's just kind of back to square one as far as the accumulation. They had some good runs, wasn't, you know, full blown alt season. Because Bitcoin has been so volatile and so exaggerating its price movements, I am expecting some silly things with altcoins, you know, perhaps another move. I mean, altcoins are still, even though we had this big correction, generally speaking, you know, they're still up on the year from the capitulation lows. Let me just get rid of this. All right, so that's kind of my thought and my reasoning as far as Doge is concerned. So even if I don't take a Doge trade, I didn't want to buy Doge yesterday. I was very, very tempted. I don't want to buy Doge because I knew when Bitcoin crashed that the dollar values of everything would crash hard too. And, so I wanted to kind of wait that out a bit. Might not even buy Doge, but I'll certainly pay attention to it. That is generally my favorite zone. And for the most part, for anyone who enjoys those cyclical plays, when I was buying Doge here, I was averaging down from 25 Satoshis down. Now think about that. It always looks easy in hindsight, right? Think about it. You're at 25 Satoshis. Oh, it might even start at 27, to be honest. I can't even, maybe even 27. So you start at 27, then it drops down to like, 45% on the BTC charts. So what did I do? I averaged down and I bought some at around 18, like before this pop right here. And that was it. And then I sold in the 90s as it was breaking down right after McAfee showed it at the top. Anyways, so that was that play, right? So, but when you buy low, doesn't mean it's going to be perfect. You run out into battlefield, doesn't mean you're not going to get covered in blood and dirt or whatever. No, right? It's going to get messy. It's not easy. It's not like all of a sudden you're just going to click a button magically. You're going to buy the exact bottom and then the market's going to bounce and, singing angels will float out of the sky and, you'll be crowned the king of shit coins, right? King or queen. No, that's not how it works. Sometimes if that does happen, it's nice, obviously. You never know. Sometimes you do get the perfect plays, but oftentimes that's why I don't try to go for exact bottoms. I just go for like bottom areas, general zone. That way, sometimes I don't get all my low orders filled. Sometimes I only get some of my low orders filled. Sometimes only my highest orders will filled. And then at that point, I'm like, well, better to have some on the table in this trade, some money on the table in this trade than no money, right? So that's kind of the way I look at it. Very kind of easygoing approach as far as that's concerned. So looking at the bloodbath on altcoins, I mean, this is absolute degenerate bloodbath. And if you're completely new to crypto, you should get really used to this, right? If you don't get comfortable with this, if you don't obtain a mental sense of equanimity, not peace with this, right? Then you're not going to do very well. You're not going to survive very long in this game, right? Because this is business as usual, right? This is business as usual. This gets a lot more predictable when it's business as usual when you have those big parabolic moves, right? Even knowing this though, depending on the type of trade or play that you're doing, you might still not do anything. Like, I was watching Tezos break down on the head and shoulders and all that stuff and making lower highs and all that stuff. And like the trader instinct in me definitely would have, if I was in a midterm Tezos trade, I would have taken some profit. But the longer term investor accumulator in me was like, that's not my plan. That's not what I'm here for. I haven't accumulated this so I can, sell my bags on a double or a triple or whatever. I'm going for bigger targets. But that's just me. That's just what I do. Obviously, I'm sure some people probably did take some profit off of the table, or maybe some people didn't take any profit off of the table, or maybe some people bought too high or didn't buy at the lows or whatever. Maybe someone even bought the top, right? So there's probably a whole mixed bag of what people did in relation to that. But I know for myself, I didn't want to sell. I also didn't feel it was. I almost feel like in some ways, because I accumulated and I put a lot of attention to it, I almost feel like at this point, it's like I'll, I would, if I were to sell, that would almost like this early in the game, I feel like that would almost hurt the market. Like, I don't want to be the cause of the market crashing, right? And so that's why I'm always like, people got to make their own bloody decisions. Make your own decisions. I'll tell you what I'm doing. I'll tell you my thoughts and my opinions and all that stuff. But I don't like the idea of like having an army of people blindly following me or stuff like that. I don't want that. I'm not in this game to scrape money and counter trade people and stuff like that to scrape nickel and dime here and there and all that stuff. I'm not into that, right? That's why I don't touch the low caps or anything like that. I just sometimes there's even like lower cap markets that interest me, but then I look at the liquidity and I'm like, I can't really talk about that. That's, that could possibly have an adverse effect, right? So I gotta think about those things. So for myself, I'm just like, for something like a Tezos or whatever, it's accumulation play, it's longer term play. I'm still staking, money's still coming in. And for me, it's like, I wanna make sure that there's a lot on the table. I wanna make sure the volume's good, liquidity's good, and that just like ridiculous price points before I start taking profit. And then at which point, if there's ridiculous price points and people decide still not to take profit and it crashes and burns or whatever, well, then that's like, well, that's something to look at, right? So I'm not in a rush. I didn't need to sell a bunch of Tezos and create a taxable event or whatever. So I still have all my Tezos, pretty big bag of it and all that stuff. So it's an accumulation play, but the midterm instinct in me came in, and that's why yesterday I decided I need to free up some fiat, sell some Bitcoin, so I can kind of get back into the hustle bit, and hunt for those dip buys, those bounce plays that I love so much, which are like my ideal. The volatility, it's like the volatility kind of called me into it, right? So I'm going to, my longer term stuff like Tezos, I'm just setting that out of my mind. I'm like, it's staking, out of sight, out of mind. And I'm just going to focus on my midterm fiat right now. And I'm going to focus on making profit with that and just growing that. And I've already taken some decent profits this year, twice. And so some of that went into the bank. The first one went to the bank, and the second one's just going to be to play the swing, see if I can grow it a bit. And then who knows, maybe that gets tossed into, well, some of that will probably get siphoned for tax, and then some of that will get tossed into accumulating something else, right, with some of the profit. So that's kind of the way I'm adapting a little bit to that. And by being able to separate those capital buckets, I talked about this in yesterday's class with like portfolio management, but to talk about different capital buckets, when you have a long-term capital bucket, if you want to put it out of mind, you can shift your focus and attention on your midterm capital bucket and growing that, and taking the shorter term trades that aren't big cyclical trades or multi-month or multi-year trades, right? Perhaps multi-day or multi-week, and just focusing on that and focusing on the opportunity of making money there, right? So that's basically kind of the way I handle it, right? If I want to leave my long-term capital bucket, then I just got to focus on growing the midterm, and that way that satisfies the itch of the need to make some money, right? So they need to grow some capital to not feel like one is missing out on opportunities, right? ADA might be interesting too. Let me see. The thing is too, sometimes and these, it's interesting, like look at this, like a lot of these, this is one thing I wanted to show, is that I might not get my dip too. And that's fine. If I don't get the dip I'm looking for, then I'm okay with that. If Bitcoin just wants to shoot back up and go parabolic and everything breaks out into like an alt season and stuff, I'm okay with that option too. That's fine. I'll have some fiat for whenever there is a dip. Anytime there's a dip. It's like you could be hunting or waiting for some prey or something like that. And you don't know when it's going to come, but when it does come, you're going to pounce on it, right? And so that's kind of the way I treat dips. I don't necessarily know when I'm going to get my dip, my ideal dip. But I know that now I've got capital available. When I do get that dip, I'm going to buy it, right? And then I'll grow that capital. So, all right. Yes, so Ethereum. Go back to ETH. I want to go back to that. So what I found interesting here is that one Bitcoin went parabolic. This is consolidating into an ascending triangle. I'm still seeing a lot of ascending triangles in altcoins. You know, so I'm watching that. I'm not. This is very peculiar. LTC's got its halving coming up very soon. Let's see what Litecoin's doing. All right, so you got all these different levels for Litecoin. Hikinashi, obviously the Hikinashi shifted into red. We could end up creating larger consolidation patterns. It doesn't necessarily mean we have to break out. You know, in a perfect world scenario, if Bitcoin, like I said before, Bitcoin create a larger ascending triangle or some kind of consolidation pattern until the end of the year, I think that would be really, really good for the bull trend. It'd give, obviously, bulls more time to fill their bags and stuff. And it'd be a lot healthier. It means that when you break out, it's more sustainable. We can now, if we did break out of that level, when we did, it would definitely challenge the all-time highs and most likely break out of the all-time highs, but at least challenge it and consolidate it, right? But it'd be healthy, it'd be sustainable. It wouldn't be like necessarily having to, you know, look for a top every 5 seconds, you know, or wait for a top, wait for that ticking time bomb, right? Because it's sustainable, right? It goes up too vertical, it's not sustainable. But again, like I said, I'm leaning towards, unless it's double bubble, I'm leaning towards, you know, perhaps maybe we create that consolidation right here. So we're at this level now, and maybe we need to just consolidate. And that would be great. That would mean that we're going into this bull trend's already accelerated, but that would be the best case scenario as far as the bull trend's concerned. My opinion. Some people want the straight up all-time high breakouts and such, but like I said, I like crypto, right? If you can have a multi-year bull trend, a multi-year bull trend to me is way more interesting in crypto than a 2-month bull trend. Right? If it went up parabolic like December 2013 and shoots up, breaks the all-time high in a month, something ridiculous, then that's not as it's certainly interesting. You know, it's a good problem to have, I guess, but you know, not sustainable. Suddenly it's like, oh, now you don't want to, it's hard to hold crypto. You could be of the mindset of like, oh, I'm a hodler. I'll hodl through all the bear trends and I'll never take profit in the highs because that's all I do is hodl, you know, and I'm waiting for, you know, Bitcoin to take over the world and kill fiat. And I'm just going to hodl until it kills fiat. Well, you might never take profit. You might die with your Bitcoin too, right? Your ones and zeros. It's the point of money if you don't actually like spend it on anything or do any positives with it in the world, right? Just hoarding, hodling and hoarding. I'm not of that mindset. I'm a hybrid. I like trend riding, but I like taking profit. That's just me. And I don't, you know, I'm not a huge fan of fractional reserve banking, all that stuff, but I'm not shy about fiat and putting money in the bank and whatever. You know, it's a lot safer than keeping it on a bloody exchange. All right. So that was a long rant. Let's see. So here's one question. Why not trades to accumulate Bitcoin? Yeah, you definitely can to trade to accumulate Bitcoin. But like what I said earlier, the best way to trade to accumulate Bitcoin is to trade on the BTC charts, the alt BTC charts. But because the price of Bitcoin in this cycle is still much, much higher than it was in the previous cycle at $200, The paperwork and the tax bill is just, for me, I'm done with that. I want to reduce my paperwork and I want to be really efficient on taxes. So for me, even at this phase in the cycle, it's a lot easier for me to manage on the accounting and tax side by focusing on USD, right? So that's it. That's kind of where I'm at, but that doesn't necessarily, I think if I was like just starting out in crypto, I would be trading for the BTC, right? And you know, in 2015 too, like I had to, like when we went nuts in 2017, I started to really pull out hard profits. I actually had to catch up on a couple years of taxes, and I paid interest on it and might be a little fine, but the money I made in crypto was like compounding my Bitcoin, and the opportunity costs of if I would have had to give, you know, 25% of that or whatever early on and cash out a lot more early on, the opportunity costs, like I made a lot more than I paid in percentage, you know what I mean? So I don't necessarily recommend that per se. It is risky. Definitely risky. Like 90% of my net worth was in Bitcoin in 2015. So how's that for risk? Like I was literally all in. My time, my money, my everything, all my energy. It was all crypto. But was that risky? Yeah. Would people say, don't do that? You know, that's bad financial management. Of course, no one in their right mind would ever tell anyone to go all in some weird, risky, experimental cryptocurrency asset, highly volatile, on the verge, looks like it's on the verge of death, you know, at $200. No one in their right mind would ever say that. And I don't even necessarily recommend that. But that's what I did. And there's a lot of crypto people who did that too. And you know what? I'm okay with that. You know, sometimes with the big risk, you get the big reward. Sometimes you don't, you get wrecked, but sometimes that's where it can really pay off, right? That's where it can really, really pay off. So it was calculated for me. I at the time I felt like I knew what I was doing. In fact, I felt like I counted my blessings. I had 11 months at those prices, right? I almost feel for newer people now because it's like higher up, and there's literally a couple of months where it went sideways, and then it just started going up higher, really, really fast, right? Like no chill. Bitcoin doesn't know any chill sometimes. So correction consolidation would be really, really good for people who are new and need to kind of take their time and get bags and stuff. So, but we'll see. Well, obviously, you know, worst case, bear case scenario, the worst doom case scenario would be a dead cat like right into the gutter. That would be the worst case scenario, right? That would be fairly exaggerated. It would have to dump below like 45%, and there would be bounces along the way before that. But, you know, you'd look for anomalies like a pullback that would end up, you know, if suddenly you end up with a pullback down here, that just shoots way lower and just wrecks everyone, then suddenly like, okay, that's not necessarily normal or healthy per se. Right? Although you never know. But all right. So lots of blood in the market. All right. So let me just look at some Q&A. With such a weekly candle, if the candle closes like that, how confident do you about a 30 to 40%? If the candle closes like that, I'll probably be leaning towards a little bit more on the 40% than the 30% side of the ratio. If we closed a weekly like that. If we just closed a weekly like this, I would just be like, okay. Let's see, where would, so 40% would take us right there. And there is some resistance in through here. And that would be down in that zone into the 8s. You know, if I end up with my fiat capital, my midterm capital, if I end up all in at that zone, and then it goes lower on spot, well, the beautiful thing is I'm not going to get liquidated for that, right? So I certainly have wiggle room. And then if it just goes way too low, like starts shooting to 45, 50%, then that's when I dust off the old BitMEX account and starts firing some leverage bullets, right? Then it's like, okay, now the market's just getting ridiculous. Now it's just screaming. You know, that would be like the most ridiculous case scenario. I'm not anticipating that, but if it did, I would feel like an idiot for not taking, like, that to me is just like, you know, it's screaming to buy the dip for me, right? It's like you're a shark and there's so much, you're swimming in an ocean full of blood. I mean, what are you going to do, right? You're going to go to feeding frenzy, right? So if it did something ridiculous like that, and see, notice how I'm not making any predictions. I'm not telling you like, oh, it's going to drop down there and blah, blah, blah. I'm just saying, hey, if the market does this, this is what I'm doing. You do it whatever you want. Everyone makes their own decisions, but if the market does that, this is what I'm doing. If the market doesn't do that, then I'm not doing that. It's a lot more, it's actually a lot less pressure to just kind of frame the markets like that and just try to identify the highest probability scenarios versus trying to predict everything in the chaos, you know, and then feeling proud, get a tinfoil trophy because you made some predictions. You know, like, predictions don't pay the bills, do they? Anyways, all right. Or they can if you put some money behind them, of course. All right, so that's that question. How about OMG for bounce play? So this is Oh My God coin, OMG. That's a weekly cap. Wow, this it's really the gutter on the. That's a nice drop. Yeah, I think there's definitely some good opportunities at the very least for some intraday bounce plays. Like, you know, we're already seeing stuff bled out. They V-topped. We're already seeing some stuff wicking up on volume. You know, if I were to try to catch this for like an intraday trade or swing trade for, you know, a few days type of thing, then I would just, you know, like if I were to buy here, then probably, you know, just set some targets like that. And then if it were to break down and shoot lower, then like, where do you want to cut out, right? Or how does one want to handle this? You don't necessarily, I don't necessarily cut out of my my dip buys. I don't set stops in my dip buys. What I do is I average down into them on spot. I don't have to set a stop because I'm not going to get liquidated, right? Eventually it's going to bounce and it's going to go in my favor. If you're playing on margin though, you definitely have to have some tight stops because you got rolled over, well, you know, sayonara, right? So that, like, that's the only time I would set a stop on a bounce play, unless, exception to the rule is if it's a bounce play that's like a lot higher up. Like let me just show you an example. Let's say one were to, you know, knife catch the initial bounce, right? Let's say, like, oh, you know, maybe we're like somewhere similar like this. Okay, what am I going to do? Quick bounce play. So you buy a dip. Let's say you don't buy the exact bottom. You start buying it when it wicks up. You buy it there. And it goes up a few fib levels. You're like, okay, that's 10, 12%. There's 18%. There's 25%. Didn't quite make it up there. But you could just kind of scale out on each level. And that's kind of like the safer way to do it because you don't know when it's going to roll over. So if you're trying to catch those first shakeout, that's generally when I would set a mental stop and cut out. So, you know, for example, if I were to buy, like try to knife catch here, and it rolls over and just doesn't bounce and starts breaking down into one of these, well, obviously I don't want to be holding that bag when the dip is so high up in the trend. But then if you're talking about knife catching when it's at the lower end of the spectrum, you know, let's say you started buying here, you know, and then averaging down, you might not know where the bomb's going to be, but you can look at this. Like, look at this. Look at the meta trend, right? You look at this. This dropped 28%. So if you had, imagine if you had an entry point here, like, okay, I like buying dips. Buy low, sell high, right? Buying this candle because it looks pretty big. Then it rolls over again. What a lot of people end up doing is, you know, if you set a stop there, instead of averaging down, guess what? You know, you buy here, you get stopped out here, and, you know, you would have made profit. Instead, you lost a little bit of money getting stopped out. So instead, what I do is I'll buy, and then I'll just stack orders almost done as a hedge, bigger orders. And then I have, like, identify what's the max amount I want to put into this trade that I'm willing to risk. Obviously, it's got to be a sharp sell-off. You don't want to do that on these slow bleeds like this crap. You don't want to, oh, I'm just going to start averaging down on these little, you know, 10 months later, whatever. You don't want to do that, right? But the big shakeouts, the ones that bleed out in a few weeks, few days, really fast, that's where I tend to do the averaging down on the dip buys for the V bottoms. That's my favorite trade setup. It's like my one trick pony that if I see those opportunities, I usually go for them. My second favorite's accumulation plays, but those test your patience a lot more. Just take a lot longer. What I like about these trade setups is they're fast, they're clean, they're highly profitable. You know, you make your money, cash out your chips, and then go hang out on the beach. It's done, right? It's none of this like waiting around 6 months, waiting around years, whatever, right? So accumulation plays could obviously be really profitable in the meta trend, but these are better as far as like tradable. These are really good. And I actually prefer bounce plays versus shorting into parabolic peaks just because of the risk profile. Because you can't average up in a short without getting wrecked, right? Think about that. You can average down on a sharp sell-off on spot markets, and you're not going to get liquidated. You're just going to get a low average price. Generally, one can have an edge, and one can even be down a bit initially, but usually with some patience, if there's lots of volume and the shakeout's really violent, you know, it's going to hit some counterforce. Usually it's just a matter of calming down, not letting your emotions get the best of you, just waiting. Just being patient, waiting, right? It's usually, and usually you don't have to wait that long on those really sharp bounce plays, right? But if you're shorting a parabolic market, you could be right that the market's going to crash. Like, you could be right. Like, I'll give you an example. Maybe let's just say, let me just, I remember in the last parabola, you know, I took profit out of my Bitcoin trades at like the 10K area. Right now, imagine if I was shorting, right? Oh, this is parabolic. It has to crash. It absolutely has to crash, right? 100x leverage is definitely crashing right there, right? And it liquidates you, shoots up, boom. You're right, but you didn't have any wiggle room. Now, you could definitely do lower leverage. That would be the trick if one wanted to try to short the parabola. One could actually like get onto the smaller time frames, and then you could kind of you know, if you want to set tighter stops, and you know, maybe just do like a less than 5% tight stops, you'd need to have lower leverage on that, so on and so forth. Then yeah, you could take a stab. But it's not as, in my opinion, personally, it's not as easy shorting a parabola as it is averaging down on a dip and a capitulation, because you are dealing with leverage and margin. And there's a whole different set of risk with that, right? Infinite upside potential, and you could lose everything in the account, right? Whereas on spot, and yet then there's BitMEX overload, there's other things, there's stops not working and getting liquidated. You know, people think that they're, and so anyways, my preference with leverage, with BitMEX or futures or stuff like that, is day trading, scalping. Because then you can sleep at night. Then it's like, okay, did my trade, and then it's done, it's over, you close it, right? It can get, you know, if you were to, if like imagine, you know, it's going parabolic and you see a dead cat's, you know, and you short it, and then you go to sleep, right? Well, when the market's going parabolic, you're probably not going to get a good night's sleep shorting into the parabola, right? But if the market's like bleeding out and I've got a bunch of fiat and I'm just averaging down on spot on a dip buy, and the price is getting cheaper and cheaper, and even if I'm starting off in the red, my earlier entries are in the red, I'll sleep like a baby, right? So it's fine. I'm not going to wake up liquidated, right? So, personally, how deep of a depth? See, the thing is I'm shooting for at least a 35%, just because it overshot. It went up higher than people anticipated. So I'm expecting some counterforce. I'm expecting it to overshoot a little deeper, perhaps, than where a lot of people anticipate, right? People have been getting, and like the markets get lulled, right? People have been getting basically rewarded for high leverage dip buys at ridiculous price levels, you know, but high leverage up here, and every little dip you see people posting, they're leveraging up, scooping up all the dips, blah, 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 right? And so the market's got to punish some of that greed too, right? So we probably had a crap ton of liquidations, and probably people will leverage up too high and try to buy the bounce too high, and maybe it'll go lower and then they'll get liquidated even though you're right on the bounce follow. So anyways, I'm just mapping out different scenarios. As far as news this week, I mean, the only thing I saw is like LedgerX got approved. That was the biggest news. LedgerX got approved. CFTC approved LedgerX for Bitcoin settled futures. That's fairly good news. It's big news. So there's that. Someone wanted me to talk about yesterday. Someone wanted me to talk about some of the fear, uncertainty, and doubt, the FUD around the Tezos Foundation and all that stuff, right? With Tezos. So basically, you know, with how the market works in general is that, you know, when the price goes up, everyone who's in it, like, they'll have nothing but gushing praise for the developers or for the foundation or whatever. And then if the price goes down, then suddenly, you know, that turns. Suddenly it's like the foundation's evil. How come they're not paying Binance listing fees? Why my bags no go up? You know, why price go down? You know, like all this kind of stuff, right? And so they need someone to blame. They need to blame the foundation. They need to, like everything's not going down at the same time, right? Hit the brakes, folks. We have a culprit. The Tezos Foundation is to blame for this. Get him! You know, like, get those pitchforks and tiki torches. They're to blame for this. It's Charlie Lee's fault. It's you know, or whatever. Whoever they're gonna blame, you know. Charlie Lee dumped on us. That was another one. Remember when Charlie Lee called the top and he warned everyone? He said, "So I'm taking profit here. I'm selling all my Litecoin, and if you really like Litecoin, just make sure you love it at $20." Like the guy did a public service announcement for everyone, right? I mean, and like suddenly he got so much hate. He dumped on us. Charlie caused the bear trend. Why price no go up anymore? You know, it's like, yeah, Charlie caused the bear trend. Charlie took profit, and therefore Bitcoin and everything decided to die and drop 90%, right? That's Charlie's fault. No, Charlie lived through the 2014 bull cycle. Charlie watched Litecoin go from a couple of pennies to $55 and then crash back down to 90 cents. And Charlie, being wise, learned his lesson through experience. And when he saw disgusting amounts of money sitting on the table with his Litecoin holdings that he was accumulating sub $3, he did the smart thing and he cashed out his chips, right? So, but he's to blame. It's his fault. He caused the bear market, right? So anyways, obviously investors, traders, if you're going to be in crypto, if you want to survive, you not only have to embrace this, not only have to embrace the wild highs and the wild, like it's funny because the market will find a way to punish people when it goes up and to punish people when it goes down. Isn't that interesting? You know what they say? Everyone's a genius in a bull market. Everyone makes money in a bull market. Any idiot can make money in a bull market. That's not what I've been seeing. I don't know about you folks, but you know, has anybody felt a bit punished at all in this bull trend? Right? Has anybody like sold out of some of their stuff or all their stuff too soon, or you know, didn't catch the dip they wanted or whatever, and it just kept going higher and higher and higher and higher and higher and higher? Or you know, you thought some altcoins would perform good and then they start bleeding against Bitcoin and you know, stuff like that, right? Like this is a bull market and it's still finding creative. It's not really creative. It's kind of typical because this happens every bull market, right? It's all the same story. That's the cool thing about these market cycles and about the experience is you basically just kind of see the same old shit playing itself out over and over again. It has different variations of performing the same old crap, right? What I mean by that is like, you don't know where it's going to top out when it goes parabola per se. I don't know, maybe you do, maybe your crystal ball's on point, or maybe, you know, you're on point or whatever, and you've nailed like tops and bottoms or whatnot. And that's great. That does happen for sure. But oftentimes, you know, we have to trade and invest on the bleeding edge and at that bleeding edge of uncertainty. But the one thing that is very certain in all of that, even though we don't know exact tops and bottoms, even though it can go higher or lower or not go as low or not go as high or any variation in between, right? The market behavior, the sentiment behavior, the frustrations, the torture and the pains of the markets that they produce is always the same. It's always the same crap, whether you're in the 2017 bull trend or the 2019 bull trend or whatever. It's always the same, right? It's always like you always see the kind of like very similar things coming out, very similar problems and frustrations or mistakes or all that kind of stuff on both the bull side and the bear side, right? And so that's kind of the cool thing with experience, is that when you see through that, you know, when you experience that in the trenches a few times, after a while, it becomes a little bit habitual, right? There are some unknown variables in exact specifics on how things will exactly play out. But the overall bigger picture kind of remains the same. Right? The market sentiment kind of remains the same. The frustrations remain the same. The principles of buying low, selling high remain the same. The principle of people getting excessively greedy when the markets keep going up, or excessively scared when the markets keep going down, overshooting bullishness, overshooting bearishness, undershooting bullishness, undershooting bearishness, right? So you have a plan, you understand how the market behavior works based on experience, at least for the crypto markets. I haven't seen this level of like insanity anywhere else really. So I can't like all the market behavior is the same as far as price patterns and price action and TA and all that stuff. But just like the speed and the volatility of it just seems like other markets to me seem a lot slower. Like just to give you an example, gold was breaking. I did add to my gold position, by the way, as we closed above 1400. I don't know if it actually produced any fruit. But, you know, an ascending triangle is an ascending triangle, right? So ascending triangles are my favorite breakouts. But, you know, if I'm lucky, maybe I'll hit my profit target in 10 years. Right? Unless it goes up a lot faster, that'd be sweet. I wouldn't complain, but I'm certainly not gonna overestimate. Like, okay, so I set some targets. I showed some fib levels on this breakout ascending triangle. Now, how can I not buy a breakout on an ascending triangle, a 5-year ascending triangle on anything, let alone gold? I like gold. Again, I take the middle path. All this like gold versus Bitcoin stuff, I find it silly. We should all be on the same team, right? The trying to go after legacy markets here, not, or you know, maybe fractional reserve or whatever, right? Not anyways, whatever. A little healthy competition is not a bad thing either. Oh, what am I doing? I was doing a fib extension. That's it, not a retracement. So I added some. I was buying gold, and some of my profits I took in 2017 is in gold. So I added some, but you know, I set some targets, some fib extension targets, and I mean, if it breaks out and wants to hit these targets sooner than later, you're not going to hear me complaining about that. But you know, realistically, maybe it'll take years. Never know. But if in 10 years, you know, maybe this will be some profit targets or whatever. The cool thing with something like this is that you could also buy some paper gold too, and a tax-free savings account or whatever. And then if you eventually hit double your account or whatnot, then that's all tax-free. So, okay. So anyways, Tezos Foundation FUD. That's what I want to address on a fundamental note. So there was like the split between OCaml Pro developers, although apparently I heard for the grapevine that a lot of them moved over to, are still developing on Tezos or whatever. They decide they're going to create their altcoin and just kind of fork an altcoin, basically just like copy the code and tweak some parameters and create like a Tezos clone, call it Dune or whatever. And that's great. Good. I hope Tezos has like 1,000 clones. I hope it turns into like a Bitcoin or Ethereum and has a billion clones. Just keep cloning it. I don't care. It's flattery, right? That's going to happen. That's going to happen. As long as, and like I respect that because I respect open source. I respect the free market. So that's where my principles lie, because I respect freedom, right? So if someone wants to fork and create their altcoin, by all the power to them. If there was an airdrop and it can make a little bit of money off of that, that'd be great. But if they want, I respect that. Now, if they start saying, Dune is the real Tezos, and Tezos is a scam, and they call it Tezos Cash, or they call it, you know, I don't know, whatever, Tezos Satoshi Vision or whatever, right? Then I kind of like, and we're the real Tezos, and we're going to create Tezos.io site or competing site, and we're going to steal everything and try to confuse people. I have a problem with that because to me, that borderline's fraud and deceptiveness. That's where I draw the line. I have a problem. I don't have a problem with altcoins, right? I don't inherently have a problem with Bitcoin Cash or Bitcoin SV or anything like that. I don't have a problem with those forks or airdrops. You don't hear me complaining about Bitcoin Diamond or Bitcoin Gold or or any of these other offshoots of Bitcoin. Like, I don't care, right? If it's worth your while, you get an airdrop, maybe it's worth cashing it out. Bitcoin Pizza, I don't care, right? Go ahead, do it. It's open source. It's not proprietary software. I'm not down with monopolies. I'm not down with closed source and closed markets, right? But I just think it gets, where I differ is I think it gets a little bit ridiculous when you start trying to market crap as and trying to compete. Listen, the markets decide, okay? The markets decide what Bitcoin is, right? What is Bitcoin? Well, you know how the markets decide? Bitcoin dominates the crypto markets. I don't give a, I don't care what you call it. You could call Bitcoin extreme for all I care. You know, is it following the path of every single other generic shitcoin on the planet? Yes. Then it's a shitcoin. Congratulations. How to identify a shitcoin versus a real Bitcoin, right? An altcoin versus a real Bitcoin. These are all just my opinions. You might have a different opinion. That's fine. You know, we all have different opinions. I'm not gonna cry if other people have a different opinion. That's great. Whatever. You know, there are people I know that are, you know, that support Bitcoin Cash or SV or whatnot, and that's fine. I'm okay with that. But I personally, where my problem comes in is like, you know, Bitcoin Cash is like, we're the real Bitcoin, we're the real Bitcoin, we're the real Bitcoin, and they use all their marketing leverage to try to fool people into that. And then SV is like, not only are we the real Bitcoin, but we have patents and we want to run a monopoly and we want to kill open source and every other crypto project out there. And we want everything running on our chain, and we're gonna sue everyone to do that and enforce it through state violence, right? And it's like, oh yeah, that's cypherpunk all the way right there. Sign me up for that mailing list. You know? That's exactly why I got into crypto. I got into crypto because I want to participate in a proprietary monopoly chain, PayPal 2.0, and with $20,000 nodes, $20,000 to run a node. Or how about a Facebook Libra coin where it costs you $10 million to run a node, a corporate blockchain? That's why I got into crypto, folks. Power to the people, right? Anyways, whatever, bit of a rant. So that's where I'm at. Those are my thoughts in relation to the fork, the Tezos fork, bit of a rant in that. So I don't care. They have drama, all that stuff. That's fine. There's going to be drama. Get used to it. Welcome to crypto. There's going to be lots of drama. Guess what? Tezos going to have some growing pains. It's already had a ton of growing pains, but guess who else had growing pains? Bitcoin. Bitcoin had a lot of growing pains. That's what makes Bitcoin anti-fragile, right? For decentralization, growing pains make it stronger, right? All that stuff, it just makes it stronger. Look how strong Bitcoin is now. All the crap it had thrown at it. I could tell you stories. We could sit here for hours. I could tell you stories about Bitcoin's growing pains, all the, you know, stuff we had to go through, and the stories and the FUD and this and the that and the exits, all that crap, right? So you become anti-fragile as an investor, as a trader, right? You kind of grow with the crypto markets. Bitcoin has become anti-fragile as a result of that. And if you've experienced going through all the trials and tribulations and drama and all the crap, then you become anti-fragile with it. Suddenly it's like just all this crap is just another walk in the park. And then sometimes you have real issues where they are serious issues and projects do die, right? So it's not to say just because you're anti-fragile, your project can't survive, won't die. But if the project is truly decentralized, then it'll have a much higher probability of surviving. My rule of thumb is the more centralized the crypto project, the higher the probability of it not surviving. That's kind of my not always, right? Now, Ripple's fairly centralized in a lot of ways, and it's doing really well. It's doing relatively well, right? And I have nothing against that. That's, you know, they want to sell XRP as their product and still own 50% of the supply and do like I guess you could call it like a perpetual the longest ICO in the history of crypto, then great, whatever. It's fine. I don't have a problem with that. As long as they're not trying to deceive people with that, right? People, okay, the Zcash fork. So I think are you talking about the Ycash one, or are you talking about Zuko wanting to, you know, reinstate the founder awards in 2020 and port to a whole new algorithm? All of the above. Okay, so apparently there's a Ycash fork coming out on the 18th of July. If it's, I don't know how big of a deal this Ycash fork is. I'm gonna have to look into that a little bit more fundamentally. If it is a big deal, that could be really good for Zcash bags, for my Zcash bags. If there's a lot of hype around the airdrop, if people start to get FOMO-y around wanting the airdrop, well, we know what happens. People like to buy before airdrops, and then they like to dump on the airdrops, right? So if suddenly the price starts running up, I don't know how the market's going to respond. Again, I don't make predictions, but if the market starts ramping up towards the fork and Zcash starts going parabolic, everyone's getting excited and drooling over this fork or whatever, and Zcash starts to go a little bit nuts, then it's going to force my hand. I'm going to have to take some profit off the table, right? So that's how I'll treat it. I don't know what it's going to do. I know there's probably there could be a possibility that could do that, because we've seen that happen with various different forks before. But sometimes you get these forks and these airdrops that are non-events. Sometimes the hype factor around airdrops fizzles out, right? In my opinion, whether I like it or hate it, Bitcoin Cash, aka Bcash, was the most successful, in my opinion, the most successful airdrop in history. It was also the most profitable airdrop if you were a Bitcoin holder, right? At one point, even went up to $9,000. Pretty damn good. But then after that, everyone saw it. Right? Everyone, like, they saw in Bitcoin Cash, and then suddenly, like, okay, now we're gonna do Bitcoin Gold. That was the second one after that. It's like, okay, there's a little bit of hype around Bitcoin Gold, not as much as Bitcoin Cash. And then it's like Bitcoin Diamond and Bitcoin this and Bitcoin that. And then suddenly there's probably, who knows, several dozen airdrops that you could collect, for some dust or whatever. It just got to a point where I don't even care a lot of these airdrops anymore. Or I couldn't even be bothered to try to claim them, because there's also a risk if you try to claim them. You have to put in your private keys and whatever, right? So if you're going to claim them, make sure you empty out your wallet and you generate new private keys for your Bitcoin, and then claim them, because you pretty much have to throw them out afterwards, right? Some airdrops could be like a fishing expedition to scam people out of their private keys if they don't move their coins, right? Some airdrops could be like a chain analysis, de-anonymization of addresses and stuff like that, attack and stuff like that. So there could be more than meets the eye in various different airdrops. So that's my thought on Zcash. If it starts to go nuts leading up to the airdrop, then probably take a little bit of money off the table. Although it's going to be a bit challenging because I'll be traveling and I'm not going to have my crypto with me. Anyways, I'll have to think that through. And it could be a non-event because people just get almost apathetic. Too much of anything loses the hype factor, loses the scarcity factor, right? The quality over quantity. And then the other one, the Zcash founder reinstatement of some kind of founder award and fork into another chain and porting your ZEC onto the other chain, the Zero Coin company and Zuko and all that stuff. I personally am not the biggest fan of that. I personally think if you create a social contract with your people, the community, and you say, we're going to create this new coin and here's how it's going to work. The first 4 years, we're going to have a 20% founder award of all the mining rewards. It's going to line our pockets. It's going to fund operations. It's going to fund the company. It's going to make the developers rich. It's going to fill their bags up, right? That probably adds a lot of selling pressure too. But then you look at that social contract and you say to yourself, okay, well, if you can live with that, if you can live with the founder award, then invest. And then 4 years, when the founder award's up in 2020 on the block halving, then that's less selling pressure. Because guess what? If you're paying company expenses with Zcash coming in, and you're paying developers in Zcash, and you're paying yourself, there's all taxable events. Anytime money changes hands, there's taxable events. Guess what? You pay the tax, you're going to cash some out. People have to cash out. They got to pay their bills, they have to pay taxes. That's selling pressure on the market. That's like miners having to sell and pay operational expenses. But it's worse than just miners. It's also like it's double the selling pressure per se, right? So in 2020, not only did the block rewards get halved from 50 coins to 25, that's less inflation. That's monetary inflation. That's less monetary inflation supply on the markets. It means that there's less selling pressure on the markets, right? So on and so forth. We've seen how that plays out with Bitcoin. No founder awards. It's like, okay, figure it out. Figure out a way to keep this going. If it's truly decentralized and open source and stuff, how come, where's Bitcoin's the developer fund? Bitcoin's got a ton of developers working on it that have all been working volunteer for years. Where's their developer fund? Right? Where's their founder rewards? Where's their 20%? Where's their ICO? No, they do it for the love of decentralization, right? So, and if they have a good sizable personal holdings of Bitcoin, then they'll profit from the fruits of their labor by the markets doing well and the project doing well, right? So I kind of think it's a little bit, if suddenly says, oh, we want to reinstate the 20% reward or whatever, I think that's a little bit kind of sleazy myself personally, because it kind of violates the social contract a little bit. It'd be like if all of a sudden Bitcoin developers decide, we do have this 21 million hard cap on Bitcoin, but we feel like we should turn that into 50 million Bitcoin. And in fact, we want to increase the block size back to 50 Bitcoin. And then suddenly you start messing with the social contract. Suddenly the whole thing starts to get fairly loosey-goosey, right? Suddenly you don't have the same hard money. That said, it all depends on what your social contract is right from the get-go. If, for example, you're something like Tezos, and you say, our social contract is we want to test out on-chain governance, and the only thing that's written in stone is the fact that you can change the protocol and vote for stuff that you want, then suddenly in that social contract, you could say, okay, well, this is a blockchain that is subject to change. Its parameters. We've already seen that. What used to start off as baking rolls were 10,000 XTZ for a roll, and that got reduced to 8,000. Right? That's an element of the social that wasn't the social contract changing, because nowhere in the white paper social contract that they say that would be written in stone. The only thing they said that'd be written in stone is we're doing an experiment saying that we want people to vote for on-chain protocol changes, and we want to be able to flawlessly execute these changes with the minimum amount of risk to the network in case bad things happen, and to a point where it's super easy to upgrade, where people literally don't have to do anything. It's almost like an automatic upgrade without necessarily having to do a hard fork and all this crap, right? It's just new concept, new tech. And so part of that is you can expect that there are going to be changes, right? Now, it's all going to be based on community vote. Myself, I have some coins. If I don't like a certain thing, then I will vote against it. If someone says, hey, I think there should be a 100 billion, or I think we should create a trillion XTZ or whatever, and just increase the supply to a trillion, probably out of self-interest and self-preservation to their investments, the majority of people are going to vote against that. So that would be that social contract in action. People are generally going to shy away from things that are going to hurt their investments. But something like adding new features, like, making a privacy coin as well, was with zero proofs, like they want to put Zcash, or reducing baking rules from 10,000 to 8,000 so that you can actually have more nodes and make it even more decentralized and lower the barrier for entry if people want to run their own nodes or bake themselves. Then fine, that's all stuff that people can agree with and vote for. And if all else fails and the majority votes for something you absolutely don't like, no one's got a gun to your head. You can sell your coins and take a graceful exit and say, sayonara, thank you for the fun. Or if you're really against it, then you can fork and create your own altcoin and be a competitor and then try to take some market share and compete toe to toe in the free market, right? That's what freedom's all about. So I'm okay with all that, but I don't like it when they change their social contract like midway through out of self-interest. That kind of gets a little bit dicey, right? It's kind of like the problem I had with Ethereum with the Ethereum Classic card fork, is they messed up their whole value proposition. They said, especially with the DAO, if you look at the website at the time, I had screenshots, immutable smart contracts etched in stone. That literally said immutable smart contracts, ironclad, like it was etched in all of eternity. You know what immutable is? Immutable is a Bitcoin exchange getting hacked $100 million and you don't roll back the chain because too bad, it's permanent. That's immutable. Everyone lives with that. You lost your money, too bad, so sad. It hurts, but guess what? You can trust Bitcoin that it's not going to rewrite history. How do you create an autonomous system, an autonomous financial system, a trustless system? Immutability is important for that public ledger. You can't just have people going back and like erasing the ledger like things never happened. And then, so unless that's that's what you pitch your blockchain as right from the get-go. You say, hey, you know what? This is going to be a mutable blockchain and we're going to erase ledgers. And if you want to invest in it, go for it. Then suddenly they're not changing the contract on you midstream. It's almost like you create a deal with somebody. Someone comes over, they want to do some work on your house or whatever, some renovations, and you agree to, it's like, okay, we're going to do your roof. And you agree to a price, and then suddenly, like, they're midway done the roof, and then you start haggling and renegotiating on the price. Well, or they start doing it or whatever, right? Then that kind of starts to violate the contract a little bit. So there are social contracts in place with this open source public money, I feel anyway. So I'm not a big fan of that idea. We don't know what's going to come of that. I'm not a big fan of that idea. So what are your thoughts on ADA? Do you feel it will become a proof of stake coin like XTZ? Theoretically, it's supposed to be very similar to XTZ. It's certainly interesting. It's certainly been on my radar, but I actually haven't looked at where they're at on the network and their development for a few months. So I haven't been following it fundamentally. Do they have their proof of stake live yet? Do they have their network live yet with ADA, or is it still kind of just testnet and vaporware, like extensive educational research? We're just gonna do another 10 years of research before we launch it. No, but so it hasn't launched yet. It's still in the test net, I suppose, right? So when it launches, I think it could certainly do well. But so far, if I had to, isn't that cute and ironic? It's funny too. It's like I think Cardano, because they launched a lot earlier too, they had more time for the market to develop. Like, look at this. They launched in October. They launched. This is like almost like a little bit of a cash grab. When you launch your your token or your coin before the network's even live, or you launch your market, it's a little bit of a cash grab. So it had a lot more time to go through a market cycle over several years, and it doesn't even have a live network, right? Whereas like Tezos kind of took the opposite approach, which I'm a bigger fan of. It's like, wait for the live network and then launch your coin, then launch the markets. Don't give people a little IOU trinket. It's actually, in my opinion, it's actually less legally risky too, right? It's once it's out in the wild, once you launch your coin and it's decentralized, it's a network out in the wild, then it's got a life of its own, right? Also in relation to this, there's like the Tezos Foundation drama around that, but there's also like different developer teams. And the thing is like with an ecosystem and with something that's decentralized, you don't need anyone's permission to actually create an organization to support that network. That is the beauty and the point of permissionless. So people who are complaining about the Tezos Foundation, this and that, they're missing the point. It's almost like a victim mindset versus being more empowered versus like creating your reality and going out and getting it. So I know there's this other group that formed called Tezos Commons that I was looking at, and I think it's a non-for-profit that's incorporated in the US, and that's separate than the foundation. And I saw recently that they have been approaching exchanges to get listings and stuff like that. Well, who the heck are they? Well, they're just, they're just investors. They just got together and they started a non-for-profit for the benefit of that ecosystem. And I think that's good. The more associations, foundations, different developer teams, different companies, the more decentralized the ecosystem gets. That's actually a good thing. And that's permissionless. You don't need to ask someone's permission to go out and do that if a project is truly decentralized. If you have to ask someone's permission, then obviously the project's not decentralized, right? True decentralized, you don't, if you want to create a Bitcoin, another Bitcoin type foundation, right? You can do that. You want to create a non-for-profit around Bitcoin and try to like bring in your own developer team or whatever to contribute to the Bitcoin improvement proposals and stuff like that, the bit process. You can do that. You don't need to go groveling and begging to go ahead and do that. So, but obviously the more centralized it is, the less you can do that. If you have this like highly centralized ERC20 token and no network, and you're just trading an IOU ERC20 token, then that project's highly centralized around the fruits of a small group of developers because you're kind of waiting for them to launch a network. You can't contribute to a network that doesn't exist necessarily, right? It's not decentralized until the network's live, right? So if it's just an IOU or whatever, anything that's an ERC, even HoloChain's still ERC20. That's also another reason why I took profit, sold 40% of my Holo, even though I wanted to sell higher up and I still have some. It's still kind of, it's cool if they launched a network and stuff, but at this point it's still a little bit centralized. So long-winded rant, I'm not a fan of messing up that, extending the founder reward. Is trading Bitcoin into stablecoin to buy an alt a taxable event? Yes. Well, actually, it depends on your jurisdiction. Depends on your jurisdiction. If you're in Canada or the US or the UK or whatever, yes. Any trade, Bitcoin to altcoin, altcoin to altcoin, altcoin to fiat, Bitcoin to fiat. If you trade Bitcoin for Ethereum, that's considered selling Bitcoin and buying Ethereum. So the selling of the Bitcoin is a taxable event. So that's where it can get tricky, because if you keep cycling and keep it all in crypto with the prices higher up, without pulling off money for taxable events, and if the prices drop, you can really get in hot water, right? You can end up with a tax bill more than the money you have, even if your trades are profitable, right? If you don't pull out that, so it kind of gets a little bit tricky in that way. And so I simplified my life just by trading the fiat pairs. It's just a lot easier to manage accounting wise. My days of being the crypto maximalist and trading only on the BTC charts and stuff and trying to accumulate Bitcoin aggressively. Like to me, that was really good for me when I was starting, and I didn't have all this other stuff to deal with, and when the price was a lot cheaper too. $200 a Bitcoin. Of course, you're gonna want to trade for as much Bitcoin as you can. 5 digits. I mean, the price is lower relative to the highs, but obviously, like the best time is to get some BTC down here, right? All right, other questions. I'm going over, but there's a lot of stuff happening in the market right now, so I figure I'll go a little bit longer today. ZRX. Look at ZRX. So it looks like it's kind of on the USD chart. Looks like it's kind of creating a bit of an ascending triangle, large consolidation, multi-month consolidation pattern. This would be a really, really sweet breakout trade setup. Anything that's been consolidating into an ascending triangle, if it breaks out, we've got this is such a clean setup on the fiat charts, right? This is such a clean setup for a breakout trade. I mean, there's not a lot of room for guesswork here, right? You have a very clear line in the sand and higher lows. Does that mean that that this has to stay in ascending triangle? Does that mean that it can't just go and then do that? No, it doesn't mean that. Doesn't mean that at all. Does that mean that if it starts breaking out, it can't trap? Be like a little bull trap, you know, and then do that? No, it doesn't mean that at all either. That's why you got to kind of set your stops and set your risk like any breakout trade. However, does mean that if it did break out, because it's been consolidating for so long, such a long period of time, the probability of it being a nice solid breakout, like a decent breakout to some higher targets, the probability is a lot higher. So this is multi-month ascending triangles are my favorite #1 breakout trade. As far as like breaking out above resistance, I like the diagonal breakout trades too, and you break out of you know, bear channels and stuff like that. Those can be fun too for earlier entries, but these tend to produce the most momentum. But we haven't broken out yet, so this would be one of those scenarios of I don't need to make a market prediction on this in order to have a good trade setup and possibly even make some profit off of this. I don't have to have conviction right now that this ascending triangle will break out, right? Maybe one could buy a dip down here on the trend line, see if it wants to hold up, right? Maybe. But I would much prefer, in this scenario, I much prefer a breakout, right? And so this is an example of like, you don't need to predict what the market's going to do, and you could still trade it and make profits. So for example, I identified right now, here is an ascending triangle. Here's an if-then scenario. If the ascending triangle breaks out, I will catch the breakout trade, and then I will set some targets, you know, maybe take some profit, different targets, probably aim a little higher up since it took so long to consolidate, you know, and then boom, that would probably be my first target right there. If it doesn't hit that first target and it looks like it's start like rolling over and dying, then maybe I'll take a graceful exit somewhere else in this process. That's my if-then scenario, identifying the problem, not problem, the scenario. But if suddenly, you know, Spoofy the bear whale kills the market and it ends up down there, well, guess that ascending triangle is invalidated. I didn't make a prediction that the ascending triangle would break out. I don't care to predict if it would break out or not, nor do I know. But what I do know is that if it does break out, there's a higher probability that that breakout trade will produce some fruit if I catch it early enough. Very simple, right? It takes a lot of the edge after having to figure out exactly what's always going on. You just wait for your ideal trade setups. If they present themselves, great. And if they don't, then you wait for the next one. Can you please look at ADA BTC? Does that make sense? All right, ADA USD BTC. another ascending triangle. This could be actually, you know, we're kind of testing trend lines here. So this would be another example of an ascending triangle. So if these hold up and then things bounce in the BTC charts and Bitcoin does its dead cat bounce and they start breaking out of ascending triangles, then that's when we push into another wave of alt season. That's what I would call an alt season. And we probably start to see some candles going parabolic and stuff. All right, how's everyone doing? Okay, so we looked at Z. How do I stake gold? Stake gold? I don't even know what that means. How do you stake gold? Like proof of stake? Gold isn't proof of stake. I'm not sure what that question is. If you didn't have much capital and small disposable amounts from salaries coming in once a month, what would your strategy be? My strategy would be to only buy dips and as low as I can. That's all I would do. And if I want to just build up long term and I was just starting out and I had to allocate a little bit each paycheck, I would just try to get my lowest average entry possible. And I would do that by just patiently waiting for the most degenerate dips and washouts. And then I would buy every time there was a dip. And that's what I would do. And I try to get my average down as low as possible if I had to do that. And if one week I got paid and the market's going nuts and going up too high or whatever, then I don't buy that week. I just wait till there's a dip. There's no dip that month, then I don't buy. And then I'd wait. And so my rule would be I would just try to buy as low as I can on dips. And then if I don't catch the exact bottom of a local dip and it goes lower, then the next paycheck I would wait for the next dip lower and I would buy some, right? That's how I would handle it, but I would really kind of save that for some like good degenerate dips. Okay, so we talked about the Zeke FUD. We talked about the Tezos FUD. I'm just going to talk about a couple of more coins fundamentally, because I had a question weeks ago or last week, I don't think I answered, and then I'll finish it off on that note since we've gone to 2.5 hours, the extended update. The question was, what are some other coins that I like fundamentally, that I think are good fundamentally? Well, I have explained many times that technicals are number one, fundamentals are number two, right? Obviously, case in point. Technicals on Bitcoin, it doesn't matter if your altcoin can cook toast for you. It's bleeding. Doesn't matter how great the fundamentals are, unless it's like having its own little unique pump for whatever reason. Sometimes you get the odd one that bucks the trend, but these pumps are more market sentiment pumps, less than fundamentals. Just because XMAX is pumping doesn't mean it's good fundamentally. It could just be hype. It could be some airdrop. It could be some this, some that, blah, 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 right? But specifically, coins that I think are interesting fundamentally, that are of interest to me, even ones that I don't have. Obviously, you know the ones that I like that I have. I think Cosmos is interesting. I think that's interesting fundamentally. I haven't bought any yet. I'd love to buy some, but I think it's still like 50x the ICO price or something like that. So it's a bit too high for my taste. It's not, it doesn't mean it's not good. I like it fundamentally. I'd love to buy it at the ICO price, obviously, but I'm not buying it unless I see a price that I think is decent enough, right? But I think it's good. Who knows? Maybe I might trade it for fun if it's got enough. Seems like it's been building up some nice volume because I got added on Binance because I know BNB used their code to create their BNB blockchain or whatnot. So that one I think is kind of cool. Here, great interesting things about Raven coin. One coin that's really kind of caught my attention that I like to buy, but the liquidity is just crap. It was Grin. This is actually something that's a little bit of a conundrum, right? So you got this volume, right? You see this volume here, 47 million. Technically, it's got like 5 times the volume of Tezos right now, technically, right? So I'm like, great, good volume. That market must be liquid. Let me just go take a peek at that market to see what kind of, if I want to accumulate some of this. Let me just see how much I can buy here based on the market orders. Right? You look at the liquidity. It's like 50 million in volume. You're looking at the order book. You're looking at the slippage and the percentage of the slippage. Right? I mean, look at this. Okay, so let's say you're here and you want to buy, I don't know, a modest position, like you want like a few $1,000s, you're pumping the price to $5. What is this shit, right? And then, you know, if I wanted like something like tens of thousands of dollars or whatever, I guess it would take a while to kind of accumulate a position. So even though you see it's got 47 million in volume, I've seen way more liquidity on the Tezos order books than that. You know, I've seen many multiple buy and sell orders of like, you know, $50,000+ at times, or $20,000+ stacked all along, up and down. You know, so it's got decent enough liquidity where, you know, if you wanted like a big size position, still take a little bit of time, but not like this. I mean, so this is like really, really illiquid, even though the volume, and so it comes into question, like just how real is some of this volume, right? How real is the hot bit volume or the Bitforex volume, right? How real is that, right? How much liquidity do those coins have? I don't know if it's the hot bit ticker. Let me just, and you don't really see, let's even just see, let's look at KuCoin. Okay, so there's a little bit of an order down here. There's like 18K, right? And there's a little bit of a sell order here, but everything in between, like look at the slippage between those orders, right? So to actually, I'm interested in this coin. I like it because it's fair launch, no ICO, no founder rewards, open source, anonymous developers. It's a privacy coin. It's proof of work mining, all the same kind of launch as like a Bitcoin. Mimblewimble was developed by Bitcoin developers. And I suspect that the people who launched Grin are Bitcoin developers. That's why they're anonymous or whatnot. That wouldn't surprise me at all. And they don't get paid. It's voluntary, right? Like Bitcoin. So on a fundamental note, I kind of like that. And it's a privacy coin. I think there's a lot of, there's going to be some pushback from regulators on privacy coins, but there's going to be a lot of even need for privacy coins just because of the fungibility, right? The fungibility, as in what I mean by fungibility is like, let's say someone goes and hacks an exchange and they steal a whole bunch of Bitcoin. Then all of a sudden those Bitcoins are tainted. You know, now you've got like the FBI and everyone's like watching and tracking those coins. And then they do an airdrop and they give everyone tainted coins. And then you don't even realize they're tainted, or someone gives you some tainted coins. You're an innocent bystander. You don't even realize it. You go to cash it out exchange. Next thing you know, your account gets frozen. You get flagged because you just tried to cash out stolen tainted coins, right? Now, in some ways, that's kind of a good thing for catching thieves and criminals and people doing nefarious things. That's a good thing in some ways, but it's also a bad thing for actual money because you need some fungibility in money. You can't have someone like, oh, I'm going to pay you a $20 bill for those cupcakes. You take the $20 bill, next thing you know, a SWAT team shoots you on the spot because that dollar bill was marked. That 20 was marked as dirty or whatever. Now suddenly you've got your hands dirty. So there needs to be more privacy, right? So, and also the thing is too, the more pushback a certain feature of crypto, that's why it's permissionless, has, the more from regulators, the more pushback it has, the more there'll be a demand for privacy and stuff like that. There are risks, there are obviously regulatory risks if they ever decide to crack down. But anything, I would say that's something that the more decentralized a project is, the lower its risk profile, and the more centralized. I mean, you know, I have an investment at Zcash, but who's kidding who? If they wanted to go after Zcash, just go after the zero coin company, you know, and then go after Zuko, and that's it, right? simple, right? You know exactly who to go after. There's a single point of failure there, right? Whereas like something that's anonymous and just out there in the wild and no one's, you know, really controlling it, like almost, that's how Bitcoin survived so long, in my opinion, because of that. Imagine if Bitcoin started off as a company and you know who launched it, and like, we're going to take over global finance. How long do you think with our proprietary software, how long do you think Bitcoin would have lasted? Not very long. Probably would have got shut down a long time ago, right? Because it challenges the, you know, financial monopoly, challenges kind of, it's like Uber challenging taxi medallions, right? More like a little bit more peer-to-peer type stuff. Anyways, that's about it. Nice candle. Here we go again. So this was obviously this little bounce was just a tiny little dead cat. Probably would have been a good little scalp, but you know, seems like we're breaking down a little bit more. So that's it for now. That's this week's market updates. Hope everyone is enjoying the roller coaster ride, and we'll see if I can get some lower bids filled. If not, I'm not gonna cry over it. I don't need to, you know, whatever. If I'm not in a trade, I'm not in a trade. That's fine. But if it does, that'd be pretty sweet. Might get a nice little bounce play. So take care. Hope everyone's doing well. Hope everyone is managing all of this volatility and wildness, and I hope no one's losing any sleep or anything like that over this. Because, and like I said, get used to this. Be very, very comfortable with this volatility, because this is what crypto is all about. This is the ride. And no matter what, the market's going sideways, the market's too boring, not enough price action. Market's going up too high, not enough dips, I didn't buy. Market's crashing too hard, I didn't take enough profit. You know, so the market will always find a way to mess with investors and traders and such. So so that's, you just acknowledge that this is a part of what happens in crypto. It's high risk, high reward, highly, highly volatile. The more you embrace that madness and that volatility, the better you're going to do at this game. And the more you freak out, the more you, like, you know, blame Spoofy the Bear Well or this foundation or that or anything really, or, you know, evil Bitcoin making everything dump or whatever, you know, all that stuff, the harder you're going to have you're going to have a more difficult time. So usually people start off in their cycle, they start off really confused and getting tossed around and their emotions just running rampant and volatile. And then they start off just like moon dreams and then also blaming a lot of stuff. And then as they gain experience and if they survive, usually a lot of, like, sometimes those people don't even tend to survive too long in crypto. They might get a big ejected, right? But if you survive and you get enough battle scars, you've been around, get the experience and stuff, then suddenly you shift on the other side of the spectrum, more extreme side of the spectrum of, like, you know, self-sovereignty, taking responsibility for everything that happens in the markets and in investing and trading, and then not necessarily looking for superficial excuses on why the markets went up or down. blaming Charlie Lee for this or the foundation for that, or these very superficial levels. We know that there's no, or the markets went up because of an April Fool's joke, when the news, like CNBC and stuff, they're catering to the lowest common denominator, right? So if you want to get into that 10% where you're making consistent money over the years, right? You got to get out of all of that. You got to embrace all of this, embrace the chaos, be the joker in the markets, right? Be the joker in the markets. And then suddenly you'll be comfortable with the chaos. Suddenly you'll learn to embrace the chaos, right? And then you'll learn to love the chaos. And that's the point. That or just be patient with it or whatever, right? Just manage it, find different ways to manage it. I have managed it over the years by embracing it, by not rejecting it, embracing the dumps, embracing the parabolas, embracing the chaos and that volatility and the black swans and all the madness that happens, right? Embracing it. The more you embrace it, the easier time you're just going to have with all this, the more fun it's going to be. Doesn't mean you're not going to have stressful moments, right? You'll always have stressful moments. There'll always be some pain points that might strike a nerve, right? That will always happen at some point, but you just get a lot better at dealing with it and probably process and can move through it a lot faster, right? Versus letting those pain points take you down, right? So a lot of this is really about managing risks, managing emotions, identifying market behavior, and sticking with your ideal trade scenarios that work for you. If you feel more comfortable breakout trades, then make that your one trick pony. Take every breakout, just love those breakout trades. If you're more comfortable in the dip buys, just really focusing on that. If you're more comfortable scalping, day trade, focus on that. Whatever you feel a natural inclination that you're good at or that you're getting better at, that you're making profit at, focus on those areas, those details. Then you can branch into other things, but at least master one strategy going into a billion different ones. Or maybe you might have to explore some before you figure out which one works best for you. But so that's it. And then usually just be patient. Market comes to you, you got your trade set up, go for it. If not, let it go. No biggie, right? No biggie. That's also one thing that I was talking about yesterday, why having long-term capital buckets is important. Because if you have some long-term capital buckets and you miss some of the Bitcoin trade, but you have some long-term Bitcoin, it's not a big deal, right? Same goes for any other market. Not a big deal, right? No need to FOMO, no need to panic, whatever. If what doesn't have long-term capital buckets, then might be a good idea to have some. And like I said, I always kind of lean towards trying to just buy as low as I can. Just get the dips as low as I can, right? The price as low as I can. That's my rule of thumb for the larger cycle. So that's it, folks. Take care. We went a little bit over today, a lot over, but that's fine. So take care. Have a great weekend. And let's see what next week brings for us. And then in a couple weeks, we have Amsterdam for anyone who's going. So take care, folks. Cheers.